rights on this Fed chair.
And this tends to be the president's tactic, right? It's sort of look for all of the ways to ramp up pressure, either related to monetary policy or not, to try to jawbone into a position that seems like it's more amenable to the White House. I just wonder if the president isn't looking to lose Powell, to fire him, is he looking for him to step down? Is he looking to scapegoat him if there is any faltering in the economy? Is he looking just to make them some sort of poster child of the debt problem and the deficit? He kept talking about this, and I think Jim Bianco really raised a good point. President Trump seems to see the U.S. rate structure as being a credit one, not a sovereign one, and keeps saying that rates should be lower because of the creditworthiness of the United States. Whereas sovereign rates typically are tied to growth and inflation, which is a completely different calculation. And that tension, I think, is really there.
In some ways, it's needless drama, because for most people, they think this Fed will be exactly where the president wants them to be in September, and they'll start cutting interest rates. And that's only 2 meetings away. For the chairman of the Federal Reserve, he's obviously in a tough spot. He has pledged to anchor inflation expectations first and foremost, and he believes that's his most important job. A lot of people might agree with that view. The pressure that's coming, though, from the White House, and I've heard this argument made so many times, makes it harder optically for Fed chair to transition beyond his current message. In some ways, it makes it harder for him to reduce interest rates. And I think the president deep down knows that, because we've seen him ultimately say as much in public.
Which means maybe he wants him to hold rates where they are. I don't know. It's a reason why Chris Waller has to come out yesterday and say, look, this isn't political. For him to even have to say that raises a lot of questions for people. Okay, thou who protesteth too much, right? There is this sort of undercurrent of questioning of the validity of this institution, and I think some people are very concerned about that.
I think we as journalists have a role to play here to cut through some of the noise. Not all arguments for lower rates are political. That the argument that Governor Waller has presented is an economic one that we've heard from economists on Wall Street as well. There are credible economic arguments to lower interest rates right now, just as there are, going to sound like that two-handed economist sitting on the fence, but just as there are credible economic arguments not to. And that's a worthy debate that's taking place on the FOMC. I, for one, am happy there's at least a debate taking place on the Federal Reserve. I like to see that division instead of the groupthink that has really dominated that institution for quite a while.
I welcome it as well. I don't welcome the sort of questioning of the integrity of an institution. I mean, look, you can do that. I just think that that might undermine their ability to really monitor the inflation with
to do the right thing.
To do the right thing. And I think that is the one real question here. You know, are people going to be reluctant to cut rates because of the political pressure, sort of ironically? That's a real concern.
Unless they're political and they're running for that seat. But yeah, okay, let's move on to this.
Analysis paralysis.
I know. NVIDIA CEO Jensen Huang met with President Trump at the White House just yesterday. Sources telling us here at Bloomberg the meeting came just days before Huang is traveling to, guess where, to China.
Yeah, and he's going to be talking about the importance to really free up some of the chip sales and how an integrated ecosystem across countries is actually better for the AI development. Let's see how this goes. We don't know what he's going to talk about. Nonetheless, it's sort of who's who, who's got the preference in the C-suite of the White House. Right now, Jensen Huang seems to have the front seat, so let's see what he does with it.
Ed Ludlow, who led some of the reporting here, is going to join us in about 30, 40 minutes. We'll catch up with him a little bit later in the program. Let's turn to the banks. The JP Morgan boss, the CEO, Jamie Dimon, warning markets are, quote, complacent on President Trump's tariff plans. His comments coming ahead of bank earnings season kicking off just next week. Looking ahead to those numbers, Erica Nigerian of UBS. Erica, welcome to the program. We've heard Jamie Dimon, Mr. Dimon, talk about clouds on the horizon, storm clouds, and then earnings come along and it's blue clouds and sunshine. Do you expect anything different next week?
No. Actually, it's not only, the clouds are not just breaking in the second quarter in terms of the results, but it looks like blue sky as we think about the second half of the year. So think about it this way. There was really a pause in activity, whether it was loan growth or capital markets, in all of April and maybe into the first 2 weeks of May. And then what you're seeing in the regulatory data right now for loan growth and what you're seeing in industry data for investment banking is that June was a super solid month. In fact, we haven't quite had this start in first half loan growth in some time. And so you're going to have a pretty decent result. And you're going to talk about strong pipelines in the second half of the year. And by the way, what else happened in June? You had a stress test that unlocked, on average, 90 basis points more of excess capital. And so, you know, look, Jamie is Jamie, and he's always going to be cautious and warning us of the tail risks. But I think the clouds have broken in the second quarter, and you are seeing blue skies for the second half.
Blue skies, and did I call them blue clouds? I might have done.
It's okay. It's Friday.
Blue skies.
Are you kidding? I can
I'm
barely
with you.
speak.
I'm struggling.
So carry on.
Lucky we've got Erica with us. Erica, I'm picking out the numbers from your report. The rally we had off the low on the KPW Bank Index of more than 38% so far, close to 40%. Erica, just how much of that story that you described for the second half, the so-called blue skies, how much of that have we discounted so far?
Look, what we essentially clawed back in that rally is taking the tail risks off the table in terms of tariff policy. Like, I listened to you and Lisa, talk about your, your views. Who knows, right? But I think what the market is saying is, I think that risk, whatever that was in terms of the low, April 4th, that we were pricing in is now off the table. What may still have, legs in terms of continuation of the rally is the fact that deregulation is just so much more powerful, so much faster under Trump 2.0 than under Trump 1.0. I mean, we essentially had to wait 21 months after inauguration in Trump 1.0 to get our first regulatory proposal. We had a stress test proposal in April before Michelle Bowman, the vice chair of supervision, was even confirmed. And so we have, a pipeline of proposals that have already happened, whether it's stress test or the supplementary leverage ratio or SLR. And then we have more to come in terms of a more comprehensive stress test reform, GSIB recalibration. And, we said something, 100 basis points of, lower capital minimum is something like 150 basis points of extra ROE. So I think that's why, you can continue to see the rally in the banks.
Is this ultimately then a regulatory story, or are we going to see outperformers that we had been expecting heading into this year? And I'm thinking about mergers and acquisitions or IPOs in the investment banking space.
Yeah, I think it's going to be both a deregulatory and activity story. And thus, we also said in our report, you may see a broadening of the rally to scope regional banks who have woefully underperformed the money center banks really since election day. And so, I think what you'll see is the broadening of the bank rally, because you will hear about these M&A pipelines getting better. And look, these regional banks not only benefit from that in terms of some of the small boutique investment banks that they have within their companies, but also what that could mean for loan growth going forward.
Erica, looking forward to bank earnings season, and hopefully we can catch up next week. Thanks for dropping by. Erica Najarian there of UBS, looking ahead to financial earnings about a week away. Blue skies and sunshine. Got that right this time.
Perfect.
For bank earnings next week.
They've got the deregulatory tailwind. They have investment banking activity that's been picking up, trading activity that's been robust, even if it's a trading environment that goes to nowhere. And then, of course, there's a steeper yield curve, which also benefits them. So there are a couple of different prongs that are all firing. So despite some of the pretty dire commentary from Jamie Dimon, expect the profits not to reflect that.
A close to 40% rally off the lows on a KPW Bank Index from the lows of April. Unreal. Futures this morning pulling back a touch from all-time highs. We're down by 0.5%. With an update on stories elsewhere with your Bloomberg Brief, here's Lizzie Burden. Hey, Lizzie.
Hey, John. Secretary of State Marco Rubio met his Chinese counterparts on the sidelines of the ASEAN talks in Malaysia. It's the first in-person meeting between the two since President Trump returned to the White House. After the meeting, Rubio told reporters odds are high for a meeting between President Trump and China's Xi Jinping. Elsewhere, New York City Mayor Eric Adams raised more than $1 million in his re-election effort in a single night in a fundraiser in Manhattan. It's a stark turnaround for Adams, who in March reported raising just over $18,000 in a 2-month period. In recent weeks, his campaign's been boosted by donors and business leaders opposed to the Democratic nominee, Zohran Mamdani. And the original Hermes Birkin bag sold for a record $10 million at an auction in Paris. The 40-year-old black leather handbag sold after a bidding war that lasted more than 10 minutes. Tokyo-based designer goods reseller Valuance Japan bought the bag and said that it will exhibit it as a piece of, quote, global cultural heritage. And that should be a brief, John.
Lizzie, thank you. More from Lizzie in 30 minutes' time. Keep it together, Bramo.
Well, I mean, first of all, two things. That's where AMH is, clearly, to bid on the Birkin
I was
bag.
missing her.
Yeah,
Lizzie
exactly.
was reading it. I need the take from Anne-Marie.
And then the second thing, and this was pointed out by Chris in the control room, is sort of the Mamdani and then the Birkin bag is fantastic. Yeah. It's sort of this wonderful contrast of 2025.
Is that what he's campaigning on later on this year?
The $10 million Birkin bag.
Some people have got too much money.
Yeah, well, that seems to be his take, that there shouldn't be any billionaires, right?
So I hear. Up next on the program, a tale of two consumers.
If we look at other categories, discretionary categories like restaurants, you're seeing fewer, but some households pull back completely. But the people who are still going out to eat are going out more often. You've got a little bit of a disconnect, and it's kind of a tale of two cities.
Up next on the program, we'll catch up with Stephanie Roth of Wolf Research, live from New York. You're watching Bloomberg TV.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I asked whole corporations study how will you bring generative AI to their job.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jemana Versace in Doha, Qatar, and this is Bloomberg.
Slow grind towards the weekend, almost there. Equity futures down about 0.5% on the S&P. Little change so far this week, coming into Friday at all-time highs. Just a small pullback so far, down by 0.5 on the Nasdaq 100 also. Under surveillance this morning, it's a tale of two consumers.
There are certain households, lower-income households, who are pulling back completely from making purchases in travel. If we look at other categories, discretionary categories like restaurants, on the other hand, again, same analysis. You're seeing fewer, but some households pull back completely. But the people who are still going out to eat are going out more often. You've got a little bit of a disconnect, and it's kind of a tale of two cities.
So here's the latest. Mixed messages for the consumer coming from two corporations. Delta Airlines restoring guidance, saying travelers are coming back. Meanwhile, Amazon seeing a plunge in Prime Day sales compared to last year. To discuss, Stephanie Roth of Wolf Research. Stephanie, good morning.
Good morning.
Who's got it right? Is it terrible or great? Is it Amazon or Delta?
It's always somewhere in the middle. So I think what we're seeing is services were hurt in the first half of the year, largely driven by concerns around the economic outlook. A lot of that's super discretionary. So people pulled back there, especially when it came to travel. That's going to start stabilizing through the back half of this year. And then people pulled forward their demand for goods because they were concerned about tariffs. So now we're going to have the reversal of that, where the services side of the economy gets a little bit better, and there's a little bit of an air pocket on the goods front.
There's a much more simplistic way of explaining what John just said, which is people are buying $10 million Birkin bags, and then they're voting for socialist policies because you have the tale of two consumers, right? I mean, kind of what we were discussing before. Is that overly simplistic, or do you see that gap widening in terms of the ability of consumers to keep spending on the lower income side as well as the higher income side?
Yeah, I think that gap will persist. I don't think it's necessarily going to get materially worse. Of course, at the very low end, they are certainly hurt by tariffs more so than other folks. But we'll see the low-end consumer continue to remain, fairly sluggish, but the rest of the economy should be okay. And it's going to largely depend on the labor market. To the extent that the labor market remains okay, we don't see layoffs picking up materially, then the consumer should spend, albeit at a fairly slowish pace, somewhere around 1.5%.
So just to extrapolate this a little further and get a little bit existential, because it's Friday, it's Existential Friday. There's been this sort of overlay of a theme where white-collar jobs have been disappearing, and there are fewer of them and they're higher paid. And blue-collar jobs are actually expanding. And people are able to get blue-collar jobs because there are immigrants who are leaving the country or who aren't coming in as quickly, and because there is a much bigger demand for that. Are we actually seeing that in any of the economic data that will actually boost the lower and middle income end and will actually give some sort of tailwind, frankly, to a lot of the consumer-facing companies?
Yeah, I think that's a really good point. And the latest jobs print might have been the first indication of that. We saw downward pressure on the unemployment rate. Yes, the driver between native-born versus foreign-born is not entirely clear, but I think what we're starting to see is that there's some funky things under the surface that's really putting downward pressure on the unemployment rate as a result of this reduction in immigration. That's going to put upward pressure on wages for blue-collar workers, which could start to help that feed through the data. Granted, a lot of the major changes on immigration only happened at the end of May. So we're really just starting to see the effects of that, and it should take throughout the course of the summer, perhaps into Q3, to become more abundantly clear.
You've referred to three different sources of inflation through this conversation so far: goods, services, and labor. How is CPI next week going to capture that story?
Yeah, so I think we're going to start to see inflation creep up a bit. We're looking for 0.26 on core. June should be kind of modest compared to the next couple of prints that we're going to get. And it's important to flag that financial services should also be a big source of upward pressure. So that's one thing we didn't even talk about. But that's been pulling downward pressure on core PCE in the last couple of prints. It's very much going to reverse on the back of strength in equity markets. So what we're looking at is a string of core PCE of 0.3% or above for the next couple of prints, which makes September a really difficult backdrop for the Fed to be cutting.
So you think it's hard for the Fed to cut in September, at a time when the likes of Governor Waller's going around saying, hand up, let's go. Might have to cut rates as soon as the next couple of weeks.
He's also saying, hand up, I'll take the job as Fed chair. So there's some element.
You think it's political? When he sits there and says it's not political, you think it is?
Yeah, I think he's vying for the chair job. He doesn't seem to be towards the top of the list, but I think he would be a good candidate for it. But I think he's trying to get the job. I think that's the main message there. The Fed does want to cut. They are looking for an opportunity to cut a couple more times. I just don't think that the data are going to be consistent with that by September.
One of the reasons why there is a legitimate economic argument that we've been hearing to be cutting rates sooner than later is because there are sources of disinflation, and we are seeing that, and housing prices is one of them that we keep pointing to. Why is that not fair, given that it's about a third of CPI?
Yeah, but it tends to move fairly slowly. It's going to continue to kind of ratchet down, and in this print in particular, we actually think, just given the volatility in owner's equivalent rent, we actually think it could bounce back a little bit, at least just temporarily. But the rest of the inflation metrics are going to move in the other direction. So sure, housing could be decelerating, but when you get goods prices picking up, travel starting to rebound a little bit, that's just a tough backdrop for the next couple of prints.
Bank of America's Michael Hartnett came out earlier this morning and said, when we look back, the 2020s are going to be an inflationary decade that reverse a lot of what we had seen over the past 4 decades of disinflation. Do you think that the evidence has borne that out, or do you think the jury is still out to really understand how this is all going to shake out, what the ramifications from supply chain disruptions from the pandemic will be, and how much tariffs will really rejigger that?
No, I think this is just a fairly temporary second inflation shock, and we're going to be looking in a year and a half time. We're going to be moving back down towards 2% on inflation, and this will not really be a big issue. Granted, for the next couple of months, it's just difficult for the Fed to cut, just because there are temporary inflation upward pressure.
So you think Governor Waller does have a credible argument here for lower rates? The one he's articulating, you think he might be running, okay, that's your opinion, but ultimately underpinning that is a credible argument for lower interest rates.
There's a credible argument for lower interest rates. I think now is tough to sort of rush into it, just given inflation should be elevated for the next couple months. And there's not a rush. The economy's okay, and it's proved to be not that interest rate sensitive. So there's not that much harm in waiting a couple of months until we just see where inflation ultimately settles.
I still remember when Bill Dudley came out years and years ago and said Fed funds might have to go through 5%, and everyone said 5%, good luck, this economy will crater. Didn't happen.
And part of that is because a lot of people had already extended out a lot of their personal maturities. How much it really will be stimulative if they do cut. You could say on one hand, it's not a big problem. You can wait, but you could also afford to cut then, especially if it's politically expedient.
Just before you go, just quickly, when's the first cut? What month have you got penciled in on the calendar?
I think we're talking mid-2026.
You think the first cut is mid-26?
Yeah, I think we're going to see inflation a little bit elevated here. Then growth is going to remain pretty strong. We're going to have positive stimulus from the fiscal bill, and it's going to be just a tough backdrop for them to cut. Eventually they will. They certainly want to, and it makes perfect sense for them to get there. It's just going to take some time.
And we'll have a new Fed chair in the middle of 2026.
You know who agrees with her? Bill Dudley, the person who thought that there'd be 5% interest rates.
Stephanie, it's good to see you.
Thanks
for dropping by. Stephanie Roth there of Wolf Research. Coming up next, Jose Minaya of BNY, Angelo Zeno of CFRA, Steve Rasciuto of Mizuho, Walter Piecyk of Lightshed Partners, calling for a change at the top of Apple. That conversation in the next hour.
How are we going to get the debt down and the deficit down if we have these big tax cuts?
Well, David, let me just say, I think the deficit is probably the most important issue today in terms of the long-term impact on the economy. And just to put this in perspective, in the first term, we had debt to GDP ratio of about 100%. And with the tax cuts and economic growth before COVID, we were growing the economy faster than we were growing the debt. So that ratio would have come down. And I think we were trying to get it down to 90 to 95. The big focus on the first term was military spending. We unfortunately had to increase non-military spending to get it through the House and Senate. But what really impacted us was COVID. And I think, as you know, firsthand, we had to spend a lot of money in COVID or we would have had a worldwide depression, not recession. I think the problem was, the first $2 trillion was well spent. The next $2 trillion we never should have spent. And then the Biden administration kept on spending. So, we have debt to GDP of close to 125% today. That's a gigantic problem. Secretary Bessent has talked about getting the deficit down from 6% to 3% of GDP. And that's got to be a major focus.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing. Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5. Wall Street used to be a place.
I love all these new Wall Streets, Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
What started out as just a relief rally is starting to become something real.
The markets are adjusting. There's no panic so far.
If you're looking at what's been working in markets the last couple of years, it's quality stocks.
The market is pricing in a friendly sort of mix of growth, inflation, and policy.
Equities and risk are discounting the here and now.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P pulling back from record highs. We're down by 0.5%. Similar move on the Nasdaq 100, down by 0.5. The Russell this morning down by 0.9. As we work our way into the weekend, look ahead to next week. Fireworks, CPI, Tuesday, alongside earnings from JP Morgan, Wells Fargo, and Citi.
Yeah, the earnings to me really are front and center. CPI, of course, we're going to be looking for any type of tariff ramifications coming through that tariff-related inflation or not. The earnings, though, will give maybe the better picture. Do we see a repeat of things are stable, a la Ed Bastian over at Delta, or do we see beginnings of a sign that there's some sort of hit to the economy? If we don't see that, which is what's widely expected, how much more can this market rally?
Erica Najarian of UBS said blue skies and sunshine for the financials next week after a rally of almost 40% off the April low. Let's go with Jamie Dimon. Let's think about Ed Bastian. Ed Bastian of Delta is making the argument that businesses now have more certainty than they did in the first quarter.
And part of that stems from the one big beautiful bill. I mean, this to me is the certainty that a lot of people are looking at to give a sense of the tax planning, of what kind of investment they could potentially do. Key question will be, does it give them the stability to make large investments that might hinge on supply chains? And that, I think, might be something that some of the bank executives could answer.
Yeah, compare that to Diamond, who's talked about businesses sitting on their hands. Are they still sitting on their hands? Or do we see that pickup in activity in the second half that many of the bank bulls think we will see?
And this is what we've seen with respect to recent acquisitions, even with Kellogg, for example, the Nutella and Fruit Loops. I keep thinking about that and thinking, why would anybody do that? But going forward, how much more can we see of certain companies that see a benefit of being larger and could see enough of some of the noise dissipating to really have that conviction and make those investments?
A fantastic lineup of guests so far this morning, including the conversation we had about 5-10 minutes ago. Stephanie Roth of Wolfe Research, making a case for the first interest rate cut to come in the middle of next year, 2026, and looking for firmer inflation reports going into a tricky September meeting. I don't think that's what this market and many people are looking for going into next year.
You know, this goes to the question, and you've been asking it all morning, and rightly so, how much does this equity market depend on rate cuts? And what we've heard from the bulls is it doesn't at all. And it actually can continue with the gains regardless of any kind of rate cuts. A number of people have said that's not true. You need the disinflation to continue in order to support the rest of the environment. But ultimately, that's the question. Is Stephanie's view prohibitive to further gains on the equity market, or is it supportive because the stability in the economy is what will actually keep driving the equity market higher?
Equity so far this morning, negative by 0.5%. Coming up this hour, Jose Minaya of BNY on investing in a volatile environment, Steve Rasciuto of Mizuho on a shock-proof economy, and Walter Piecyk of Lightshed Partners calling for disruptive change at Apple. That is must-watch later this hour. We begin this hour with stocks lower as President Donald Trump floats a higher global tariff rate. Jose Minaya of BNY Investments and Wealth writing this: volatility is here to stay. Stay invested and look for the right diversification. Jose joins us now for more. Jose, good morning.
Hey, good morning.
Just want to pick up on that first line. Volatility is here to stay. Why is that?
Look, I think volatility, clearly, we're at an all-time high or peak in terms of the noise in the markets. If you just think about back to the beginning of the year, our team kind of added around 26, 27 different policy changes or news cycles that really kind of impacted or jolted the markets. Yet the markets have kind of powered through that, right? I think I was on one of your shows earlier in the year saying around, hey, you should not be risk off. And this was like right after Liberation Day, because of like what we're seeing in the fundamentals and trying to look past this noise. Seeing a White House and administration, there's a little bit around the carrot and the stick, right? We saw a lot of the stick at the beginning of the year. Now you're seeing more of the carrot. And again, the markets are responding to that. So it's less about today when we talk to our clients around, hey, what should you be invested in or not? But it's more about what are the solutions you're looking for. You're seeing more and more of that in the industry, whether it's technology with kind of SMA capabilities, what you're doing with model portfolios, which we do in BNY Advisors. Across the board, it is about staying invested through these times, but kind of understanding what outcomes you're looking to get.
Well, let's run with that. Stay invested, long-term time horizon. Got it. What are these strategic anchors you're offering people to get them comfortable with doing just that?
Well, I think, again, it depends on their needs and outcomes. In some cases, it might be, hey, they're looking for income, right? Like, we create a lot of like what we call like, bond portfolio in a box or personal bond portfolios with our Insight investment platform, where it's like we're getting very customized in how we deal with our clients. It might depend on when are you looking to retire? Is there a wedding? Is there educational needs and these things? So you might need principal protection. I've got a new niece on the way. In that case, I'd be like, hey, you should just go long equities. So again, we could spend a lot of time thinking about the noise, the volatilities out there. If you look at, it hasn't paid off to just say, I'm going to stay off the markets. And there's still a lot of cash out there. But again, that idea of I'm going to stay invested, but am I really focused on my solutions and my outcomes versus call it a 60-40 type of portfolio?
Congratulations on your incoming niece and going all equities in response. I am curious, though.
For her, yeah.
For the niece, not necessarily the parents, but I am curious about how much going forward the ballast for income comes from the same place. You said not necessarily a 60-40 portfolio. Let's say someone is conservative and looking for income. Does it still come from U.S. Treasuries? Does it still come from credit? Or do you have to look elsewhere for that type of ballast?
No, I think the markets are becoming a lot more efficient and they are looking elsewhere across the board. Again, we've seen the advent of private credit. It kind of plays a big part of this. You saw with the Secure Income Act where now annuities and guaranteed income contracts are being allowed to be used in 401k portfolios. I think these are all important legislations that are all kind of recognizing the incredible crisis we have from a retirement perspective, not just globally, but definitely in this country. So you need to kind of look more broadly.
There's a little bit of skepticism in younger generations, it seems. There's this concern that maybe the same kind of gains that the older generation saw in their portfolios are not going to subsist in their generation. Do you think that it will? Do you think that the returns will be the same in the next 10 years that it has been for the past 30 years for a generation that has gotten wealthy off stock market returns?
I don't. And what I mean by that is, if you look back over the last 20 years, you would have been, for all this discussion around different investments, hedge funds, private equity, at the end of the day, you would have been just fine doing a very low fee, kind of like passive equity funding. You would have been just fine. I don't think that's the case in the next 10 to 20 years. There's just a lot more volatility. There's a lot more volatility out there. I think returns are going to be more measured, yet it's, again, finding your spots. Again, it's not about anymore, can I find the strategy that just I can sit back and it's just going to grow 15, 20%. It's being able to do the work around how you diversify your portfolio.
I applaud the risk appetite of the younger generation, looking at things like crypto, don't you?
Well, where else do you
Their
think
risk appetite is far higher than it was when we were growing up.
But maybe not necessarily for the same instruments. And this is exactly where I was going to go. It's for Bitcoin. It's for hedge funds. It's for NFTs. It's not necessarily for some of these other instruments. And are they correct?
Yeah, I would actually, slightly disagree, John, a little bit, that I think if you look at the younger generation, they tend to be a lot more risk averse in terms of buying a home. They're buying their first home.
Well, that's an affordability issue.
Affordability,
they
but
just can't afford it.
Yeah, but I have conversations with some of these folks, including in my family, where they're heavy in cash. But if you look at their portfolio, what they're invested in, they are invested in crypto or these things. So there's a lean here to technology and some of these quote unquote cool things versus, look, just put your money in a 401k and max it out. Hey, by the way, do a balanced portfolio, set it and forget it. That stuff, I think there's a lot more risk aversion.
Can we get your ideas on what to do with bonds? This is what Michael Harder of Bank of America had to say this morning. Best performer decade to date, gold. Worst, treasuries. Calls it a decade of inflation. What should you do for the decade ahead, and what do you do with that bond portfolio? You talked about income. A lot of people are very worried about inflation hanging around for too long.
Yeah, look, I think we've got a more kind of constructive view on inflation. It's why we still see the markets kind of maybe topping out, or the wide end for us is around 6,400 S&P. But look, I think this is a time where there's likely to be more rate cuts coming, right? You can debate whether that matters or not. You were just having that conversation. I think it's a good time to lock in yields today. And again, for us, it's not necessarily just about what's going on with treasuries, right? It's again, how are you looking at your overall platform and portfolio? There's a lot of different kind of characteristics to take into account.
Jose, I appreciate your time.
Thank you.
Thanks for giving it to us. Thank you. Jose Minaya there of BNY. Similar argument on income from Emily Rowland a little bit earlier this morning.
There's value there. And actually, it will serve a similar, not necessarily the same kind of role that it has played in the past, but it will still provide income. And that's the reason why people have been going into credit. That's the reason why people have been going into treasuries. You're actually getting something for them. So why don't you get them now, even after some of the biggest consecutive losses that we've seen in a generation?
Even with credit spreads super tight. How many times do we hear the same argument?
And it's what's borne out this year in the market. I mean, let's just call it what it is. It's actually been the ongoing grinding tighter in that spread picture, despite some of the naysayers.
Credit spreads are near the tights of the year. Equities coming into Friday, all-time highs. Check out the Treasury market this morning. Yields higher by 4 basis points so far. The 30-year at 4.91, the 10-year at about 4.38. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. President Trump is threatening a 35% tariff on some Canadian goods. The tariff is an increase from the current 25% tariff level and would take effect on August 1st. It'd be imposed on US imports from Canada that aren't shipped under the terms of the US-Mexico-Canada agreement. Trump also told NBC News that he's eyeing blanket tariffs of 15 to 20% on most trading partners. And President Trump plans to visit Texas Hill Country today, where at least 120 people were killed in last week's flash floods and more than 170 are still missing. President Trump is expected to get an aerial tour of some of the hard-hit areas and met with first responders and relatives of flood victims. And Apple is planning a release of a line of new products during the first half of next year, including a new low-end iPhone, multiple iPads and upgraded Macs. The budget smartphone, dubbed the iPhone 17e, will be a follow-up to a $599 model that Apple launched earlier this year. And that should be my beast, John.
Hey, Lizzie, thank you. More from Lizzie in about 30 minutes' time. Up next, the Morning Calls Plus, Bloomberg's Ed Ludlow and Angelo Zeno of CFRA as NVIDIA's Jensen Huang takes a visit to the White House, live from New York. You're watching Bloomberg TV.
global headquarters in New York. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
This is going to be the core of the debate as we get into the second half is there room for the Fed to cut much more aggressively in the event that the economy slows, this tariffs inflation story turns out to be transitory, or will they have to remain on hold for the entirety of the year to fight off an economy that's starting to overheat?
Ed Al-Husseini of Columbia Threadneedle making the argument the second half of this year could be tricky for this Federal Reserve. Stephanie Roth of Wolfe Research making the argument that you might not see rate cuts until the middle of next year. From New York City this morning, good morning. Equity futures so far negative by 0.5% on the S&P. On the NASDAQ, we're down by 0.4%. That's the price action. Here's some morning calls. First up, Piper Sandler raising its price target on Amazon to $250, citing the Prime Day sales doubling in length to 4 days. Bouncing back on that stock by 0.75% to 1%. Your second call from Wedbush upgrading Cinemark to outperform, saying the company is poised to benefit from a consistent slate of movie releases. That stock is up by 2.5%. And finally, TD Cowen upgrading Texas Instruments to buy, saying the chip maker is positioned to outperform in either a sharp or gradual recovery. That stock is up by 0.5% also. Let's stick with tech. NVIDIA CEO Jensen Huang meeting with President Donald Trump at the White House yesterday. Sources telling us here at Bloomberg that Huang is set to travel to China in the coming days. Helping to lead our reporting, Bloomberg's Ed Ludlow, and he joins us now for more. Ed, what was the purpose of that meeting?
Well, it's interesting because we don't know what they discussed, although the president took to social media right to talk about the growth in NVIDIA shares and the $4 trillion milestone. What was interesting is earlier this week, Jensen Huang went on MSNBC, and in the course of that interview, he made the argument that the American technology stack, in which NVIDIA currently holds a monopoly in the market for AI chips, is akin to the US dollar, right? The US dollar is the world's reserve currency. And the message that he was kind of putting out was, you know, we want our technology to be the world's technology reserve, and therefore China needs to have access to it. And he's kind of been consistent on that, John. You know, it's not a matter of tariffs or penalties. It's an issue of export control. And he has basically consistently said 50% of the research and researchers focused on AI are from or in China. And it's better they have our tech than their own tech if we want to stay in control of this field.
Ed, any sign whatsoever that that argument is actually resonating with this White House?
So there's reports that NVIDIA has decided to proceed with a specific designed for China chip that may come in September. The situation was that they required a license for their existing China chip. They decided not to pursue that license. And what Jensen Huang told me, if you remember, is you can't engineer any more performance out of these things unless you start from the ground up. NVIDIA has not officially confirmed that. You know, Jensen Huang regularly goes to China. They have many employees in China, but it is notable, our reporting, that he's going to meet with the Commerce Ministry. And, you know, one would imagine, and based on like a lot of the conversations I've had with big investors as well, that Jensen is very fixed on this idea that they're an American company that conforms with American laws. You know, I'd suggest that in that conversation with the president, he would say that, but also knows he has to go to China and get something out of it, reassure customers that basically have had their access to that technology cut off.
Just before you go, one final question, different company, similar theme, Apple. This came from Lightshed's Walter Piecyk. He's going to join us later this hour. AI will reshape industries across the global economy. Apple risks becoming one of its casualties, and he's raising questions about the future of Tim Cook. What would you like to know from Walt later on this morning?
Well, I'd ask him who on earth would replace Tim Cook. The short list of candidates for that role is very interesting. Mark Gurman reports all the time, right, about the change in unit leaders and lieutenants, but the CEO is a different thing. The reporting on this new lineup of devices next spring is really interesting. It's very analogous to Tesla. The future may be AI, but in the near term, the bread and butter of revenue growth is in refresh of devices, and quite clearly they're being aggressive based on Mark's reporting to get more out there into the world at various price points and continue getting people to have Apple products in their hands so that when AI does come, they'll be able to use it somehow. But on the CEO question, ask him who. I'd love to build a short list.
Apple down this morning by 0.6%. Ed, thank you, sir. Ed Ludlow with the latest provocative piece from Walter Piecyk this week.
And it highlights how much Apple has been left behind by the dynamism that we've seen in the big tech in the United States, and a real existential angst there about what they can do to really turn that around.
Do they have to get a little bit more acquisitive? Do they have to make a big buy, a big purchase?
Do they have to do what Meta's doing and maybe do that big purchase in the form of signing bonuses back for their employees that were poached by Meta just in the past few weeks?
Let's build on some of these conversations. Angelo Zeno of CFRA joins us now for more. Angelo, I want to start with NVIDIA. A theme of your research over the past few months is that NVIDIA has de-risked the China story. Could you just explain to all of us how they've gone about doing just that?
Yeah, no, thanks, John. So, for the most part, you kind of look at just their most recent results, and they've essentially come out and zeroed out the potential for China, when they've actually also said that there was an $8 billion opportunity in the quarter that they're missing out on because of China. So we know there's a massive opportunity and a growing opportunity out in China, but in the same respect, we know they've de-risked it because they've essentially zeroed it out. And we'd expect China at this point to represent less than 5% of sales from the company, essentially all of it coming from gaming and what have you. So that's what we mean by it being de-risked. I'd also say this, when we saw the reversal of the EDA software restrictions kind of lifted last week, I think that is also kind of increasing the sentiment out there, or belief that potentially NVIDIA does have that opportunity to get back into China. You just kind of heard Ed talk about that opportunity as well in terms of a new potential chip out there. So I think when you kind of look at the dynamics right now, it's tilting more favorably towards NVIDIA potentially getting back in there, with the respect that right now there's nothing coming from that region as well.
Angelo, there's sort of this deeper psychological question, and it's been underpinned by what Ed was outlining from Jensen Huang, what he was saying over the weekend, that ultimately if the U.S. wants to be dominant in this sphere, which is like being the reserve currency, that it needs to allow a greater degree of sales into China. Do we have any sense of how much that message is resonating in the White House?
I mean, I think it has to be resonating to some extent because, I mean, it seems like, at least right now, the Jensen's got Trump's ears in some respect. I mean, they're having face-to-face meetings. I think that's definitely a good thing, more so than I think, some of these other tech leaders are having. So, I think it's resonating to an extent. I think Trump, it definitely respects Jensen. And at the end of the day, I mean, just looking at some of the recent moves that we've seen, again, with that software ban, and just potentially using NVIDIA's chip as a bargaining chip, their business as a bargaining chip, like we saw with Saudi Arabia, I think just it points to the fact that, hey, listen, it is resonating that, they're not necessarily looking to block NVIDIA out across the globe, but they do want to leverage NVIDIA with these trade deals out there. So I think it's more along the lines of investors at this point being patient, but I do think ultimately you do see NVIDIA, again, back into China as well as other regions of the globe.
I wonder how much it's important for analysts like yourself to see Jensen Huang with the ear of the president. And who doesn't have the ear of the president? And I'm thinking of Tim Cook of Apple, who seems to be falling off the bandwagon when it comes to his favorability in the president's eyes. How much do you agree with Walter Piecyk of Lightshed, as John was talking about, this idea that this is somebody who no longer really has the creative or even diplomatic helm of Apple in a way that benefits the company?
Yeah, I mean, listen, we are a little bit worried about Apple in the sense that, historically they've been very slow to move to changes, right? I mean, and it's worked in the past in the sense of, hey, listen, we want to make sure we get this right. And we're not going to be, quick to move, and we don't necessarily need to be the first ones out there. However, in an AI-driven environment, things move really, really fast. And in that type of environment, I do think Apple needs to change to an extent. Now, it doesn't necessarily mean that they have to, get rid of Tim Cook. I'd probably say that's something you don't want to do at this point in time. And the reason for that is because we are seeing a number of departures at the company. At the very least, right now, I think you need to hold on. You want to hold on to Tim Cook and have that solidified, at least at the CEO level. So, but I do think changes need to be made. I do think the company needs to work faster. Again, does it need to be done via some M&A, just acquiring more talent the way Meta has? I think all those should be on the table at this point in time. But the most important thing right now, I think, is really kind of getting the Siri integration across the App Store right. And they need to get that done here within the next 9 to 12 months to at least restore some credibility within the company and with some of their developers.
Do you think that's achievable with the tools and the talent they have in-house right now, Angelo? I think that's the ultimate question.
To be honest with you, I don't know. The answer probably is no. And I think the reason I say that right now is because they are looking elsewhere in terms of, the perplexities of the world and what have you to at least fill a void, or even, via Anthropic or an OpenAI. So I think Apple realizes they are behind, but it's actually a good thing that at least they've realized that and they're trying to do something about it. And as long as they can fill that void, whether it be, temporary or what have you, that's extremely important, I think, for investors at this point in time.
Angelo, I appreciate your time. As always, thank you, sir. Angelo Zino there of CFRA on both NVIDIA and on Apple. Walter Piecyk joining us in about 20 minutes.
Yeah, seeing Tim Cook as the departure that they would need. Do they need a departure, or do they need an acquisition? Or do they need something of both? And if they do need to make an acquisition, who would lead it if it wasn't Tim Cook, to Ed's point?
And can they close it? Or does the regulator step in and have something to say about that?
Yeah, that's sort of the brilliance of the Meta plan, right? The backdoor acquisition, the backdoor, just sort of acquire the talent and you essentially have the company.
Walter Piecyk, later this hour. Don't miss that conversation. Up next, Steve Rasciuto of Mizuho on a shock-proof economy, plus Yahara Anand with your morning movers and another potential deal, this time in the food space. Live from New York City this morning, good morning. You're watching Bloomberg TV.
investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
$60 minutes away from the opening bow. 2 days of gains into Friday, pulling back by just 0.6% so far this morning. We're down by 0.5% on the Nasdaq 100. With your morning movers, let's cross over to Yahara Arnott for more. Hey, Yahara.
Hi, John. We start with Performance Foods surging on takeover speculation. It is up 6.7%. We're reporting that U.S. Foods is exploring an acquisition that would create a $100 billion food distribution giant. Both companies supply food to restaurants and stores across North America. And it feels like we're hearing more and more about these deals or potential deals, which brings us back to what Delta CEO Ed Bastian had to say yesterday, that there is clarity to invest and that the environment is incredibly stable. So these trends speaking to that. Next up, we have Freeport-McMoRan. The American mining giant is down 2.6%. We've mentioned this stock a lot this week because it was one that was understood that could stand to benefit from President Trump's copper tariffs, but UBS just hit it with a downgrade to neutral. Analysts there expect a softening in demand and fundamentals to weigh on copper prices over the next 6 months. And we end with Levi Strauss. It is surging up 7.75%. The jeans giant hiked its full-year revenue forecast, saying that despite all the added costs from tariffs, it sees sales rising 2% this year. That's due to strong demand and a strategy shift that's been working, which is to provide head-to-toe denim, so not just focusing on jeans, but also denim accessories and clothing. John, I'd love to see you in head-to-toe denim.
Yeah, I don't know about that. What do they call that? Canadian tuxedo? Isn't that what they call that? I think that's what they call that. I think that's what they call that.
I think it's a 1980s uniform.
Yeah, just have no interest in it
really?
whatsoever.
I think you would actually like a man purse in denim.
Yeah, no.
Absolutely has your name written all over it. Yep,
no.
100%.
Yahara, thanks for that, I think. That's a hard no from me. Standout line this week, there's been many. Savita Subramaniam, never underestimate corporate America. And you're seeing signs of that, even from the likes of Levi's and other companies too.
Yeah, and even Aritzia, they came out and they said that they are happy that the tariffs on Chinese goods weren't higher. And that's one reason why they don't have to raise prices, and they actually are boosting expectations. You look at all of this, and it explains why there is a sense that U.S. corporations can adapt to anything, including 10 to 15% tariffs, or dare I say 15 to 20% tariffs? I guess that's the real question.
TK's favorite phrase. He's always said it for years and years and years.
I know.
They adapt and they
adjust.
There we go.
And I've been repeating it, and I feel like a little Tom Keene clone because I keep repeating that phrase because he's correct. We've seen that time and time again.
This equity market close to all-time highs. Looking ahead to data next week, CPI in focus. We've had 4 months of softer than expected core inflation. Can we make it month 5? Joining us now is Bloomberg's Mike McKee. Good morning, Mike.
Good morning, John. Well, that's one of the key questions out there for American companies. And I'm here in Jackson at the Global Interdependence Center's Teton Economic Forecast. This conference looked like the Bloomberg TV green room. Everybody that you have on the air on a regular basis was here. And the general feeling was, at this point, that you should keep buying in the equity markets. The equity markets will be the ones that react the most if and when we get this inflation that's expected. but we haven't got it so far. The forecast for Tuesday is that we get a slight increase in prices, but everybody's going to be looking at what's below it. And really, July is not on the table. Take a look at what's ahead of us now. We've got 3 jobs reports. We've got 3 CPI reports before the September meeting, just one of each before the July meeting. And according to most of the people here, they're not expecting to see a whole lot of evidence that the inflation rate is going up or that jobs are going down before the September meeting. Once you get the 3 months in there, then they feel there's a chance you need to start looking at different alternatives to investing. But for right now, stay in there.
Mike, noise or signal? I think we've had this debate over the last several months, and when you talk to people about the goods economy, they say things like, we've got all this pre-tariff inventory that we've been working through. Don't take it as signal, it's noise. And what you're going to see in the months later is a pickup in prices again. Do you lend much weight to that theory, Mike?
Well, the theory makes a lot of sense, and it may come true. The biggest issue, John, is that the president keeps putting off the tariffs, giving companies a chance to continue to hold on to those inventories or restock them a little bit. The reports we've had, of course, from ports of Los Angeles and people like that is that we're seeing far fewer imports. And if that's the case, it will start to show up. And when the tariffs go on, then it should start to show up in a much bigger way. In the May CPI report, we saw washing machine prices go up because the president raised tariffs on steel. Once tariffs go in for other products, then Americans are going to see some higher prices, whether companies can absorb a lot of it or not.
Mike, thank you. Just one final question. Why is it always the Grand Tetons? Why is it always Jackson?
You know, I have a theory about that now. We talked to somebody who's on the town council here, and they pointed out that Jackson is in Teton County. Teton County is the wealthiest county in the United States. There's an awful lot of billionaires who live here, and so it attracts people who manage their money.
There we go. Michael McKee. Thank you, sir. That's a decent explanation. It's not the fishing. It's because of the money.
Okay, that actually would make more sense. The problem with that, with all due respect, Mike, is that this has been the case since the 1970s. They've been going to Jackson Hole for a long time. So the fact that this is now the hub of economic theory, it's bears, elk, and economists. And I do wonder if it's partly because there is a proclivity of academics to go hiking. I actually think that that's what it is. And so you might as well go somewhere that's beautiful and rugged, and you can experience the great outdoors.
It was Volcker and fly fishing, wasn't it?
Well, it's
that what it was about?
It's fly fishing, it's Camp Kotak,
like
it's like baseball or cricket.
Okay. Anyway, Steve Risciuto of Mizuho writes in the following: the lack of systemic risk in the economy should ensure the economy will remain as impervious to shock. Steve joins us now for more. Steve, good morning. It's good to see you. Let's talk about that. The shock-proof economy. We've been teasing it all morning ahead of your appearance. What is so shock-proof about this economy? What makes it shock-proof?
Well, as I indicated, there's no systemic risk. There's no asset liability mismatches, and there's no asset price bubbles. So typically systemic risk occurs when there's an asset price bubble that is funded by an asset liability mismatch, i.e. you've borrowed short and invested long. And the rising asset price bubble, eventually a curve inversion changes the economics, the bubble bursts, capital's destroyed, and when capital's destroyed, liquidity just sucks out of the economy. In an environment where assets and liabilities are matched and there's no asset price bubble, a curve inversion had no impact. And the economy, because balance sheets, when you go down the chain through non-financial corporates, households, banks, shadow banks, because the balance sheets are strong, everyone's deleveraging, everyone has very, very exceptionally low debt servicing costs and relatively long duration. You're in an environment where nobody has rollover risk, nobody feels the impact of anything that happens from the interest rate environment, and therefore you don't have the same kind of credit-related issues that have typically popped up and caused a problem.
Is this a shock-proof economy or a shock-proof market?
Oh, no, it's a shock-proof economy because corporations are in this position as well. Non-financial corporations' debt service burdens go back to 1960 levels. And they've been deleveraging since the financial crisis. Even though we have record corporate issuance, the amount of corporate debt outstanding is actually continuing to go down because we refinance less than we're actually maturing off. Corporations in this country are cash rich. And we see that in terms of their cash positions, whether it's the Mag 7 or even when you go down the chain of to smaller and smaller companies, you see this buildup of cash that has taken place. It's one of the reasons why there's an excess supply of savings in the economy that's helping to dampen long-term interest rates.
Okay, so this is the reason why the economy hasn't tanked and why you haven't seen any kind of real deterioration in equity valuations. But can you see ongoing strength in the face of potential, I don't want to say shock, but changes, real changes to trade and potential tariffs that could be much higher than people are currently expecting?
Again, because of the ability for companies in this very solid financial position to adjust their businesses, which gets back to your Tom Keene quote, you wind up in an environment where basically you have the ability to adjust quicker than people think. And this is really what sets the U.S. economy largely apart, because we are the largest, most leveraged nation in the world. So you have to understand credit to understand how the economy functions. And in an environment where credit quality is excellent, you see that in spreads, you're seeing an environment in which there's really no issue. People can get the funding they need to morph their businesses, or they just use it out of internal earnings.
One additional task now for economists is to navigate policy coming from this White House and really understand what the strategy is, if there is one. You've pushed back against the people that have suggested there isn't one. You believe there is. Yeah. So let's get into that. What is the strategy?
Well, I think you have to understand that the strategy is on three-dimensional. There's geopolitical, there's socioeconomic, and macroeconomic. And we in our business tend to just think in the macroeconomic plane. But you look at things like what Trump is doing, like what he just did with Brazil, what he's doing with China. Those are geopolitical issues. Then you look at Mexico, and it's largely a socioeconomic issue. So you've got to take apart some of these things that seem irrational from a macroeconomic standpoint, and then look at the macroeconomic piece of it and saying, well, what he's doing so far is basically attempting to create a level playing field, which corporate America kind of likes, number one. Number two, he really keeps on, as we indicated with Mike McKee, keeps on pushing out the dates of these tariffs, and people are beginning to recognize it is a negotiating trick on his side. So you begin to back away from the paranoia that comes out of it, and you have to ask yourself a question. Does Donald Trump really want to destroy the economy going into the midterm elections? The answer is no. I think Donald Trump wants to try to expand his polarity in the midterm elections to do what he really wants to do, which is drain the swamp, which means he needs a bigger majority in Congress to change some of the laws that have been keeping us with a structural deficit of $2 trillion.
Is that a recipe that comes with higher yields or lower yields, higher rates or lower rates?
I think the risk is it comes with higher inflation and with it higher yields. I think the presumption that the market has had continuously that the Fed needs to cut interest rates because the economy is somehow or another weakening. This economy is capable of running a trend. And when you throw fiscal stimulus on it, you will get above trend. And even though you could say over the long term, the Trump tax cut and the tariffs may net out, in the 2025-2026 period in particular, the tax cut is front loaded. So you wind up with the net stimulus helping to lift the economy in 2026.
Given that, if the Federal Reserve does cut rates this year, will that lead to hotter than expected inflation in the medium term that challenges that?
I think it'll lead to a backup in yields almost every bit as much as they cut short-term interest rates, as we saw happen last year. I think when you cut interest rates when you don't need to cut interest rates, it's not a good policy prescription. And they clearly made a mistake last year, and I think they're sitting here this year with, as Mike indicated, you've all indicated, that you have situations in terms of the potential of tariffs coming down the pipeline to lift prices, and you have an economy that's proving to be very, very resilient. You've got a labor market that's proving to be very resilient. What would be the benefit of cutting interest rates?
Steve, you've called the economy really well so far. Credit to you. It's good to catch up. Thank you. Thank you very much. Steve Raschuto there of Mizuho. That's the situation of the economy, the situation in the market so far. Going into the weekend, equities just a little bit softer. The opening bell about 50 minutes away. With an update on stories elsewhere with your Bloomberg Brief, here's Lizzie Burden. Hey, Lizzie.
Hey, John. Secretary of State Marco Rubio met his Chinese counterpart on the sidelines of the ASEAN talks in Malaysia. It's the first in-person meeting between the two since President Trump returned to the White House. After the meeting, Rubio told reporters odds are high for a meeting between Presidents Trump and China's Xi Jinping. Elsewhere, Tesla is planning to expand its robo-taxi service into California and Arizona after its recent rollout in Texas. CEO Elon Musk expects the driverless cars could launch in the San Francisco Bay Area in a month or two. Tesla's also applied to operate in Phoenix, and a decision is expected by the end of this month. And Goldman Sachs is piloting its first AI software engineer. Goldman's tech chief Marco Argenti told CNBC that the bank has partnered up with AI startup Cognition for the endeavour. The company plans to start augmenting its workforce with the AI engineer that is named Devin. And that's Bloomberg Brief, John.
Lizzie, thank you, and thanks for everything this week here in New York. Lizzie Burden there. Thank you very much. Up next on the programme, we'll set you up for the day ahead. Plus, Walter Piecyk of Lightshed Partners calling for disruptive change at Apple. The future of Tim Cook. Up next.
Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator, a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
I think we're going to see inflation a little bit elevated here. Then growth is going to remain pretty strong. We're going to have positive stimulus from the fiscal bill, and it's going to be just a tough backdrop for them to cut. Eventually they will. They certainly want to, and it makes perfect sense for them to get there. It's just going to take some time. I think we're talking mid-2026.
Stephanie Roth of Wolf Research with, I think, the call of the morning so far. I hope the president's not listening. The middle of 2026 for the first interest rate cut from this Federal Reserve.
Yeah, at the same time, isn't this kind of what he wants, the economy to hold in there, to allow him to continue with the negotiating tools? So on one hand, yes, this isn't what he wants. On the other hand, well, you know, maybe it is when it comes to the economic implications.
Counting you down to the opening bow with equity futures negative here by 0.5%. As we get to the weekend, a sneak peek of next week, Tuesday. Bank earnings kicking off with JP Morgan, Citi, Wells Fargo, plus CPI inflation data the very same morning. On Wednesday, earnings from Bank of America, Goldman, Morgan Stanley, and some PPI data. Thursday, another round of claims plus retail sales. And on Friday, going into next weekend, UMich consumer sentiment. That's all for next week. On the here and now, let's talk about tech. A management shakeup at Apple as its COO plans to step down. Our next guest thinks it should also consider replacing longtime CEO Tim Cook. Walter Piecyk of Lightshed Partners writing, Apple now needs a product-focused CEO, not one centered on logistics. It's time for more disruptive change and not less. Walt joins us now for more. Walt, it's been too long, my friend. It's good to catch up with you. Let's just start with the core issue here. What do you think the problem is at Apple right now?
Well, they're just missing product cycles. I mean, the big one now is AI. It's one thing to pull the string on things like Apple TV, which were predicted for years and never happened, or Project Titan, a much bigger one, which was an autonomous car. I was just down in Austin. The autonomous industry down in Austin is obviously thriving. Huge opportunity, I think, missed by stopping that program. But this newest version, and frankly, autonomy is a version of AI, but AI in general, not only is a missed revenue opportunity, but if you're not a major player there and you're one of these large companies like Apple, Google, whoever, that in itself can disrupt you. And they are clearly far behind. They overpromised a year ago, and that's being kind to call that overpromising. They said that they were going to have all of these AI features. None of them developed. We all use Siri. It still is not a good service. This is a real risk to the company. This is to say nothing of Tim Cook being an incredible CEO for what they needed during this iPhone era with logistics. But now you clearly need someone that can move forward on a lot of the product development. This company spends, John, $35 billion a year in R&D. It has risen as a percent of their revenue to 8% of revenue. And it was only, what, 3, 4, 5% 10, 15 years ago. $35 billion a year on new products. And we've seen the stuff like the HomePod or the Vision Pro, which I blew $4,000 on and haven't seen any app development of note on there. We need someone in there to kind of not only develop those products, but have the confidence to push them forward to commercialization.
Well, is it something that can be solved just with an acquisition? Whether that's an acquisition of a company or doing what Mark Zuckerberg's doing over at Meta and just acquiring lots and lots of very expensive talent? Why does it require the ultimate story change, which is to get rid of the leader right now?
Apple does tons of acquisitions. They're buying small companies all the time and developing multiple teams within the organization to develop products. In terms of mega acquisitions, I mean, okay, go and try buying Netflix. Go try and buy ChatGPT. The one people are talking about, Perplexity, as everyone mentions, is a wrapper. And then there's a wrapper of LLMs. It's not its own LLM. And the assumption is that this LLM or this wrapper is somehow going to be able to integrate with all of the very valuable information that Apple holds dear from their users that's private within the phone. Or we're saying, oh, that the AI experience is only going to work in the iPhone because that's what everyone uses. And the assumption then is that Perplexity, not an LLM, a wrapper, is going to have the expertise, like a ChatGPT, to somehow integrate that data and do deep integration. I don't know whether that's true or false, but everyone's just assuming that Perplexity is going to fix it. It's certainly going to put them in a better place in terms of the user experience, but I'm not sure that necessarily provides this deep integration that everyone expects, or just effectively disintermediates the company altogether, because if they're just passing you through to ChatGPT and Sam Altman comes up with a better interface in working with Johnny Ives in terms of how you want to get access to your data, again, these create existential risks for the company.
So, Walter, I'm going to lean on Ed Ludlow here. Who would take over Tim Cook's role? I mean, who do you see as being a better CEO for Apple?
I mean, that's not my job. That's the board's job. And frankly, that's Tim Cook's job. The suggestion that only Tim Cook is the CEO to run this company is crazy, right? I mean, I've been doing this for 30 years. I've covered plenty of large companies. It is the CEO's job and the board's job to develop a bench that can handle changes that are in the company. And if they don't have a succession in place today, a CEO internal at the company that can take over this company today, that in and itself is a failure of the CEO of the company as well as the board. But there's, look, we can all just ask ChatGPT to come up with answers. There's plenty of answers of CEOs out there that are product focused, maybe some former Apple employees that can take over an Apple. But the suggestion that like Tim Cook is the only one that can run this company, I've never heard that before.
Walter, I've got to say, before we started, we actually were asking both ChatGPT and Siri different questions, and Siri just gave us Google results, and ChatGPT gave us very thought-out questions to ask Tim Cook, acquisition targets, why they would choose not to, and it was very well thought out. So to your point, that does seem like an alternative. I just wonder what happens to Apple if they are unable to make some sort of radical change and shake things up. Does it leave the Magnificent Seven? Does it become obsolete? Is there somebody else, another company that eats its lunch?
You have, look, Apple, great company. It's almost like, in some ways, I've heard people say it's an alternative to treasuries. It's a constant bid. But I also heard 2 years ago, plenty of people say like, oh, the market can't go up if Apple doesn't go up. How can you be negative on Apple? You're negative on the market. And here we are, the market's at an all-time high. Right? We have leadership changes, which always happens, right? Everyone always, gets very upset about, oh, well, it's only 7 or 8 stocks. Those 7 or 8 stocks obviously change over time. Apple's down, market's at a high. If they don't, execute on AI, they're just going to fall further back. And they're still getting a premium multiple in the marketplace. It's a company that doesn't grow. You have very bullish analysts that come on this program and everywhere else, and they miss. And guidance misses, and they're like, well, don't worry, because revenue is going to get back to 5 or 10% in the quarter after guidance. And then we move forward a quarter, and they just pull the string and say the same thing over and over, and the company never returns to the growth that they're expecting. So if you miss AI and you can't get back to growth, at some point, investors get fed up. The multiple contracts back to where the market is, or perhaps lower, because you can't grow the company. And that is, again, the risk that this company has. When it becomes clear that we're beyond the internet era into the AI era, we have new leaders, and you effectively lose that premium in the marketplace. People used to tell me that AT&T could never trade at a premium to Verizon. Verizon was the quality company out there, and look where we are today.
Well, just a final question, just to repeat some of what Lisa said. If they're the casualty, who's the winner? Who are you thinking about? Where would you place your bets right now?
That is what is awesome about this AI world that we're about to enter, John. That I don't know. I mean, there are so many companies that are looking at in Google search, same issue, right? I don't even use Google search anymore. I only ChatGPT all of my, all of the stuff that I'm looking at. So that's what's exciting about what new entrant can come up. That's what's great about our economy. That's what's great about a non-regulated, competitive economy. You have new competitors that can come in and change things. John, I've been doing this long enough.
Yep.
People said Motorola would never, would be the one forever. BlackBerry, we'd never get rid of our BlackBerries. Nokia, I'm not saying that this is the next BlackBerry, but like we are at a time when technology provides an opportunity for disruption. And when there's disruption, you have new entrants come out of nowhere with a great solution. And that's what's so exciting about AI, and why I'm so happy to be able to cover this space for the next 10 years.
I've known you a long time, and you don't make headlines just for the sake of it. Provocative piece. Loved catching up. Well, thank you, sir. Walter Piecyk there of Lightshed Partners.
Do you think it's going to be even a phone? Do you think it could be an earpiece? Do you think it could be glasses? Do you think it's just, an implant in our brains?
I'm going to say what Walt said. I've got no idea.
Me neither.
Coming up on the program on Monday, Peter Chia of Academy Securities, Tom Becker of BlackRock, Vito Speduto of RBC Capital Markets, and Judy Beal of Kane Anderson Rudnick. From New York, have a wonderful weekend. This was Bloomberg Surveillance. It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that
you want to exist in 100 years?
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
In case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting this. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. You know, with all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Bring you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
All right, futures pulling back from all-time highs on this Friday morning. 30 minutes to go until the official start of trading. I'm Katie Greifeld.
And I'm Shonali Bassick. Matt Miller is off today, and Bloomberg Open Interest starts right now.
Coming up, another day, another tariff. President Trump announcing a 35% levy on Canada. And as such, stocks pulling back from record highs with earnings season set to kick off in a big way next week. And a rendezvous at the White House. NVIDIA CEO Jensen Huang meeting with President Trump ahead of his trip to China. We'll see what that means for the stock.
Yeah, absolutely. Let's take a look at what it's doing right now, because we hit $4 trillion, didn't we, Katie, this week in terms of market value. It is pulling back. It closed above that valuation mark just yesterday. Jensen Huang had met with President Trump ahead of that trip to China. There's going to be a lot of readout of what the tariff strategy means for the AI semiconductor sector. Other Mag 7 stocks also lower this morning, Katie.
Yeah, certainly not helping out the S&P 500 at the benchmark level. But what is doing well this morning is crypto-related stocks surging as Bitcoin extends its record rally past $118,000. Riot Platforms, Marathon Holdings, and Coinbase all higher pre-market. It's risk on if you just look at this screen. A different story, of course, in traditional equities. That's with President Trump doubling down on his tariff threats. The president says that he's eyeing blanket tariffs on most trading partners while singling out Canada. In a Truth Social post, he threatened that 35% rate on some Canadian goods. And then you had Prime Minister Mark Carney responding on X, saying that the Canadian government will defend its workers and its businesses. Joining us now is Bloomberg Washington correspondent Tyler Kendall. And Tyler, give us some context here, because 35% certainly sounds steep, but then you consider the USMCA exemptions, and I think that covers most Canadian exports.
Right, exactly, Katie. And that's a really important point to make here, because when we do look at the bulk of those Canadian exports, they are USMCA compliant. Data shows us it hovers somewhere around 60%. And a U.S. official does confirm to us here at Bloomberg News that those USMCA compliant goods will remain exempt from these future tariffs. So in theory, this could lessen the blow for Canada moving forward, but it no doubt is not welcome news for the Canadian Prime Minister Mark Carney, who's been trying to leverage, I think it's safe for us to say, his relatively warmer relationship with President Trump compared to his predecessor as they try to race ahead looking for when it comes to our northern trading partners. If you look at President Trump's letter from yesterday alone, he talks about fentanyl concerns, but also heightened market access for U.S. dairy farmers. And then we can't forget that just last month, negotiations basically went off the rails because of the White House's dismay that Canada was set to collect revenue from its digital services tax. And ultimately, Canada had to abandon those plans just to get the talks back on track. Katie and Shanali, also important to remember here, of course, the sector-specific tariffs with the news this week of that 50% tariff coming on copper on August 1st. That's going to hit Canada particularly hard. They're one of the top exporters of copper to the United States, which only complicates these negotiations further.
When we talk to investors on the set every day, they say they're assuming a tariff rate in the mid-teens level. And then you had the president telling NBC that we're just going to say all of the remaining countries are going to pay, whether it's 20% or 15%. 20% is higher than what a lot of investors are expecting. What are the chances they stay that high?
Right. So that's sort of the big question here. This is the first that we really have heard President Trump threaten a higher global baseline tariff. Our understanding up to this point is really that it was going to be at 10%. And our analysts at Bloomberg Economics say that as of now, the average U.S. tariff rate is already up 10.9 percentage points from when President Trump took office. It hovers around 13.3%, according to our analysts. So now take into account that perhaps that baseline could be even higher, plus some of these individual countries are facing tariffs as high as 50%. Look at Brazil, look at the European Union potentially, as we wait for some sort of updated tariff rate there, as President Trump does reiterate that he's going to be sending the EU a letter in perhaps today, the coming days. He previously said earlier this week, we really are looking at President Trump doubling down on his broader tariff plans.
Tyler, we thank you so much for joining us this morning. That is Bloomberg's Tyler Kendall, all over every move in Washington. Now, one company shrugging off the effect of President Trump's tariffs, surprisingly, for now, is Levi. Shares are rising on a positive earnings report. Levi CFO saying, quote, given our strong first half and continued momentum across the business, and despite higher tariffs, we are raising our full-year revenue and EPS expectations. For more, we are joined by Bloomberg retail reporter Lily Meyer. Why is Levi able to weather the storm with the tariffs, especially given that you would expect input costs to go up so much? Is the consumer holding up just that strong?
Yeah, I think Levi's strong revenue is really helping it navigate the tariff impact. They beat estimates, they raised their guidance, and so I think their strength in their DTC strategy and in their product is really driving their strong performance.
Yeah, it's really interesting because heading into yesterday's close on a total return basis, the stock was already up almost 16% year to date. Of course, having another good day in the pre-market right now. We'll see if that holds through the actual cash trade. But give us some context here. What is setting Levi Strauss apart when you think about some of its peers and the similar issues that they're dealing with as well?
So Levi's was a really interesting stock to watch right now because they were one of the first retail companies to report right after President Trump announced his Liberation Day tariffs. And in their first report, they didn't include the impact of tariffs. So this is the first time we're really seeing how they can navigate tariffs. They have a relatively new CEO, Michelle Goss, who's led them in this DTC first strategy. So they're prioritizing selling on their own platforms, which they've seen a lot of success with. They're also branching out in areas like tops and dresses, and they've seen a lot of success there as well.
Lily Meyer, we thank you so very much from Bloomberg News on the retail industry. And later today, catch an interview with Levi's CFO at 2 p.m. New York time. And earnings season officially kicks off next week with big banks and Netflix leading the charge. I'm getting my spreadsheets ready today. Joining us now with more, Bloomberg Equities reporter Alex Semenova. Starting with the banks, we start on Tuesday, of course, with J.P. Morgan and the big, more Main Street focused banks, then followed by Goldman and Morgan Stanley. Trading revenue is expected to do really well. But is that going to almost mask what we might see from the rest of earnings season? If the banks do well, can the assumption be that the rest rest of corporate America is also doing so?
That's certainly very possible. There are so many sources of optimism when it comes to the big six banks that are kicking off the earnings season next week. Of course, as you mentioned, analysts are expecting an increase in trading revenue across the board. Those segments are expected to benefit from those big swings that we saw back in April from President Trump's tariffs. In equities, Goldman Sachs is set to lead with a $3.7 billion haul forecast, followed by Morgan Stanley. And then in fixed income, currency, and commodities, JP Morgan is set to take the top spot. And plans, of course, by U.S. regulators to ease capital rules are seen as a massive tailwind. That's, one of the tailwinds that everyone has been citing, and potentially set to unlock as much as $70 billion worth of capital. Investors will be listening to guidance from corporate executives, of course, on how they plan to allocate that capital to boost profits for banks. And going into this earnings season, a lot of equity strategists have been saying go long financials. It's a segment that's been doing really well. The S&P 500 financial sector up 9% this year.
And the regionals also crushing it. I would ask a version of your question, too, about big tech, though. Can the rest of earnings season go well in terms of sentiment if we don't have big tech really show up here? Netflix kicks us off next week. They have been such a bright spot in this market. It feels like they're firing on all cylinders here.
They are, Katie. Of course, Netflix is up 40% year to date. It's up some 50% from its lows back in April. So valuation is very much a concern. Seaport Securities downgraded the stock, specifically citing valuation, saying that they have really high expectations baked into the prices. But the expectation for now is that they will deliver on earnings. Bloomberg intelligence analysts say that the company is in for a gangbuster second half of the year. They're expecting solid revenue gains, even during a time that has been seasonally weak for Netflix. They see a 15% increase in guidance and a 33% increase in operating margins. So they're, for now, expected to do quite well.
All right, we'll see if they can deliver. The stock is up 40% year to date, which is nuts.
A lot of great new content. Have you guys noticed this on Netflix?
I haven't been watching much Netflix,
me
but
neither.
I've been told that there are a lot of good news.
I hear. Bloomberg Intelligence tells me that their content slate is really good.
We'll have to tune in.
Yeah, I would trust them with my life.
Rami Malek. A lot of Rami Malek movies and shows, I've got to say. If you're looking for a weekend binge.
The generational talents. Let's talk about airlines, because we got Delta yesterday, really knocked it out of the park. What stuck out to me was that you actually had United outperform Delta yesterday. Stakes, it seems like, have been really raised just in the past 24 hours when it comes to next week's airlines earnings.
What's interesting, though, Katie, even though United Airlines outperformed yesterday, they're actually expected to report second quarter earnings that could soften on slower revenue growth. That could be offset, though, by lower fuel prices, blunting the impact of that. But overall, the theme of this earnings season is that the expectations are really low, so companies are likely to beat on that. Obviously, Delta is an example of that, with the CEO saying that consumers are shrugging off tariff headlines, that they're kind of desensitized to them. And also, President Donald Trump's tax bill is expected to boost spending for air travel. That could be something that we see from United as well.
It feels like if you give any guidance at all, that's good enough. I'll note that the Delta guidance that we got yesterday for the full year, it was lower than what they were looking at in January, but they gave it, and that was enough. So we'll have to see how their peers fare. Alexandra Semenova, great roundup as always. Let's quickly check on these markets right now. We did it yesterday. We hit an all-time high for the S&P 500, and we're waving it goodbye right now. The S&P 500 down about 0.6% in the pre-market. Those trade fears re-entering the equity scene right now, and you can see that in the NASDAQ 100 as well, and especially in the Russell 2000, down about 0.9%, Shanali.
Right, those new tariff rates that are being discussed for global tariff rates are a little higher than what a lot of people are expected, but clearly the president is seeing that the market can stomach just a little bit of this pain. Now, coming up, Apple planning an ambitious pipeline of new products for the first half of 2026. I know I need a new phone. We're going to talk about what's going on with the company next. This is Bloomberg Open Interest.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing. Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
And now to high interest, a look at what's making headlines around the world. Driverless Tesla taxis are coming to California and Arizona. The news comes on the heels of last month's limited robo-taxi rollout in Austin. CEO Elon Musk predicted that robo-taxis could launch in the San Francisco Bay Area probably in a month or two. And Apple is planning an ambitious pipeline of new products next year, including a new low-end iPhone, multiple iPads, and upgraded Macs. It's part of a push to generate more consistent revenue growth. Analyst Walter Piecyk joined Bloomberg earlier to talk about the company's AI challenge.
AI in general not only is a missed revenue opportunity, but if you're not a major player there and you're one of these large companies like Apple, Google, whoever, that in itself can disrupt you. And they are clearly far behind. They overpromised a year ago, and that's being kind to call that overpromising. They said that they were going to have all of these AI features. None of them developed. We all use Siri. It still is not a good service. This is a real risk to the company.
And it's hard not to watch NVIDIA. NVIDIA CEO Jensen Huang met with President Trump at the White House yesterday. The meeting is just days before Huang leaves for China. He has been vocal about the need for U.S. companies to access the world's largest semiconductor market. And for more on NVIDIA, we are joined by Bloomberg Technology co-host Ed Ludlow. Ed, big week in Sun Valley. NVIDIA hitting $4 trillion here. A lot of questions about the future of AI. What do we know about the meeting that Jensen had with the president and how it could potentially help move forward as the U.S. and China talk through their newest relationships and try to figure out the way forward for the AI industry?
Well, the truth is we don't know what they discussed. Sources confirmed that there was the meeting, and we also know, based on our reporting, that Jensen Huang will continue on to China next week for a prominent industry event where he's due to meet with high-ranking Chinese officials, including the commerce minister. It was interesting. Jensen Huang gave an interview on MSNBC this week where he likened the American technology stack to the dollar. The dollar is the world's reserve currency, and he feels that NVIDIA's technology, but broadly American technology, should be treated in the same way, that the world should rely on it, and that includes China having access to it. What we don't know is what happens next with a China-specific product for NVIDIA. There have been reports that a specific chip designed and engineered from the ground up could come at the end of the third quarter, but NVIDIA's not talked about it. What Jensen Huang has been consistent on, and this relates to his meeting with the president, is super consistent that NVIDIA is an American company and it obeys American laws. So you just don't imagine that NVIDIA is going to do anything unilaterally in China without keeping this administration posted on it.
Yeah, it seems like he is going on a charm offensive in both countries. Our reporting shows that he's scheduled to meet with the Chinese Commerce Minister, among other senior officials. So we'll watch that situation closely. We're also watching Apple very closely. And we just heard on Bloomberg Surveillance from that analyst from Lightshed, who is making the case that Apple needs a new CEO here. I was talking to Mark Gurman about it on the close yesterday. He poo-pooed the idea, but what does the chatter in the tech industry that you live in sound like around that point?
Yeah, I mean, Tim Cook has been here this week in Sun Valley, along with all of his sort of mega cap tech peers. I haven't watched back that interview yet, but John Ferro did promise me, he asked, will you give us a short list then? Because I think people find it very hard to see who around the world of technology would jump into Tim Cook's shoes. Bloomberg reports so regularly on the change in lieutenants, right? The COO this week retired and his number 2 stepped up into that role. We've had a new CFO in the last 12 to 18 months at Apple. But being the CEO of Apple is a very different kettle of fish. So that's interesting. And then we have the reporting that Apple's now going back to what it's done historically, much more aggressive in being quicker to bring refresh to market on the devices side, because that's been a part of the story, right? We've all been waiting around for AI to happen. That hasn't gone so well for Apple, but they've also been slower to roll out new generations of iPhone, iPad, and Mac. And based on Mark's reporting, that's coming in the spring. And that's part of the strategy, it seems, to return to more consistent revenue growth.
Yeah, exactly. Our Mark Gurman reporting that Apple's planning new MacBook Pro, iPhone 17s, E, and iPads by early 2026. But is that what investors want to see? I mean, consumers are one thing, Apple customers are one thing, and then there are Apple shareholders, and it seems like they're just mono-focused on what's going on with AI specifically.
So in the first half of this year, probably the first quarter at least, the stock really traded on tariff and headline risk around trade. More recently, and we saw this with WWDC, literally in that session during the course of the presentation, there was disappointment that we didn't hear more about the pure play artificial intelligence tool for a consumer in the form of Siri. There were some really important milestones, Apple allowing developers to use its in-house LLMs as part of app development, but that is what the street's still waiting for. And so even with the reporting on the device refresh for the spring, it's still the focus of the street when they're going to be competitive vis-a-vis a ChatGPT or a Gemini or a Grok or a Claude from Anthropic.
I also want to point out that throughout the week, you have been at the summer camp for billionaires, Sun Valley, Idaho, for the Allen & Company conference. And there you wrote about Scott Bessent's address to the crowd. Really interesting to hear about the Treasury Secretary comparing the two most unlikely people to be compared, George Soros and Donald Trump. The idea of patience is pretty interesting here because a lot of Wall Street has relied on Bessent to kind of preach patience. And it looks like from your reporting that that is a very similar relationship that he is building with the tech community too.
So what sources told me was this was a moderated Q&A late on Wednesday morning, and he was asked, compare your current boss, Donald Trump, to your former boss, George Soros. Bessent did 2 stints at Soros Management, right? And he said they're very similar in their ability to do deals, but they are both impatient. And he said that as Treasury Secretary, I counsel and advocate patience to the president. He also talks a little bit about his outlook for rates, which is quite interesting. He said we basically see 2 cuts to rates, one full cut, one half cut in the balance of this year because of the strength of the economy. But the nuance in what he was saying, sources tell me, is that he doesn't expect rates to go back to where they were in the pandemic, right? Which is kind of what the president's been talking about. What he sees is rates kind of going back to normal but elevated levels that they were pre-pandemic. And the final bit that we heard him discuss was he was asked about Elon Musk's political party, the American Party. And what sources told me was he said, what party? And then joked that Elon Musk could get votes on Mars in the future, a reference, of course, to Elon's ambitions for humankind on a different planet. But you're right. This was about him balancing his persona with the investor base. He's been a long-running attendee at Allen & Co. And his loyalty to the president. And he was very praising of the president's ability to do a deal, find problems, find fixes.
It's the America Party, Scott Bessent, if you're watching right now. I don't think that he's filed any paperwork, but Ed, fantastic reporting. Really Your coverage out of Sun Valley this week. That is Bloomberg Tech co-host Ed Ludlow. Let's take a check on futures right now. Ahead of the opening bell, we are just minutes away, and you can see those all-time highs. Unless something amazing happens, it doesn't look like we're going to get a fresh record today. The S&P 500 off by about 0.6% in the pre-market.
It brings us into the red for the week, actually. So we'll be snapping, Katie, about 2 weeks of gains with the new tariff threats here.
Well, that's the thing. When we're at these record heights, we need some fundamentals to push us forward from here. We'll discuss some of those fundamentals with Ann Barry. She is the founder of Threadneedle Ventures. She'll tell us why she thinks Meta's ad strategy will be a win. That conversation coming up. This is Open Interest.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, is emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Big tech's down, but crypto stocks are up ahead of the opening bell. Riot Platforms, Mara Holdings, Coinbase, all higher in the pre-market, rising as Bitcoin extended its record rally past 118,000. Crypto is making its way more and more, Katie, into the public markets. It's worth paying attention to. They're the ETFs, but of course, one by one, you have SPACs and you have all sorts of listings for these Bitcoin treasury
companies.
Crazy.
So hot right now. Yeah, it's interesting to see Bitcoin and, of course, the crypto equities up today. They're not following the stock market. Maybe they're following gold. You do have gold higher by about 0.8%. Maybe that's the correlation underway, because I don't think Bitcoin has any fundamentals yet. I don't think it has any cash flows, but we're going to talk about equities a lot in the next 4 minutes, because that's where the opening bell is. Ann Barry is joining us. She is the founder of Threadneedle Ventures. That conversation up next. Don't go anywhere. This is Open Interest.
get the debt down and the deficit down if we have these big tax cuts?
Well, David, let me just say, I think the deficit is probably the most important issue today in terms of the long-term impact on the economy. And just to put this in perspective, in the first term, we had debt to GDP ratio of about 100%. And with the tax cuts and economic growth before COVID, we were growing the economy faster than we were growing the debt. So that ratio would have come down. And I think we were trying to get it down to 90 to 95. The big focus on the first term was military spending. We unfortunately had to increase non-military spending to get it through the House and Senate. But what really impacted us was COVID. And I think, as you know, firsthand, we had to spend a lot of money in COVID or we would have had a worldwide depression, not recession. I think the problem was, the first $2 trillion was well spent. The next $2 trillion we never should have spent. And then the Biden administration kept on spending. So, we have debt to GDP of close to 125% today. That's a gigantic problem. Secretary Bessent has talked about getting the deficit down from 6% to 3% of GDP. And that's got to be a major focus.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
We are just moments away from the start of trading. Welcome back to Open Interest and welcome to your Friday. I am Katie Greifeld. You take a look at futures right now. Not too much of the Friday feeling when you take a look at the S&P 500 down about 0.5%. When you take a look at the NASDAQ down about 0.4%. And boy, I don't even want to look at small caps right now. As Shanali noted, if these levels hold, if these losses hold, that will wipe out weekly gains for the S&P 500 one day after we hit that record high. The NASDAQ 100 is already there, looking at losses on a week where we saw NVIDIA reach $4 trillion in market cap for the first time. But one company can't hold up the entire market. But in any case, you do have people ringing and clapping at the opening bells at the NASDAQ, at the New York Stock Exchange on this Friday. If we take a look at the single stock level, do we have any good news?
It's not looking, actually, it's looking a little better now. We were lower for our NVIDIA on the morning. We're actually starting to turn around. Let's see if it holds. Remember, NVIDIA closed above $4 trillion in valuation just yesterday. CEO Jensen Huang was seen at the White House ahead of his trip to China. And we'll be keeping an eye on the trade today because, of course, as you say, one stock can't hold up the market forever, but maybe it might be the one that drags it down today.
Well, while NVIDIA decides what to do, let's take a look at Levi's, signaling strength in the face of tariffs, saying sales growth is expected to have a bigger impact, coming out with a guide that was much better than expected. And you can see that in shares. Levi Strauss shares up about 10% as trading kicks off. This was a company that was already up about 15, 16% on a total return basis year to date, much higher than that right now. We'll continue to follow that story. But let's zoom out here because it seems like investors are counting on U.S. stocks to rally on a robust earnings season before the market loses steam towards year end. That's according to Michael Hartnett of Bank of America, who wrote in his latest note that, quote, no one is worried about the economy or valuations. Let's discuss with Ann Berry. She is founder of Threadneedle Ventures, joining us on set. Great to see you in person.
Happy Friday. I've got that Friday feeling, even
Friday.
if the market doesn't quite.
I know. Well, a lot can happen between now and 4 p.m., so fingers crossed. But let's talk about that idea. You maybe see some concerns right now, but when it comes to the economy, when it comes to valuations, Michael Hartnett says no one is concerned. Are you?
I am, and can we take Delta as just an example for why I think the narrative and what drives earnings season success is going to be really bizarre. this earnings season. Think about what happened. Delta came out and basically said, we have got the least worst possible state right now. You know, the worst of the uncertainty, and I think a lot of it was a reference to the Middle East, sort of in their perspective, being behind them. But how extraordinary that share price rallied as much as it did, simply because it said we're willing to put out some guidance at a level materially below where it was at the beginning of the year, and yet we saw the share price rip. Like, that to me is emblematic of what Michael Hartnett is saying in his note. Not that no one worries, but I think we've sort of persuaded ourselves that, you know, not terrible news is a good outcome.
You know, it's interesting, to your point, Delta is still down 8% on the year.
Right.
And so when you look at the broader earnings season, is it going to be a very barbelled season where you're going to see some blowout effects from things like bank trading, but other companies really struggle through this tariff strategy?
I think so, but I also do think that I think the market is looking at the tariff situation and saying we just don't believe, right, the outcomes are going to be as terrible as they were. So I think there will be some sort of barbell. I doubt we're going to see the massive, like 30% in one-day extremes we saw before. I don't think we're going to see the catastrophic drops either.
I just want to stay on Delta because I also thought that was a really interesting moment. I want to put some numbers to what you were talking about when it comes to their forecast. They see an adjusted profit of $5.25 to $6.25 per share a year. That, relative to their forecast in January, as you pointed out, their forecast in January was $7.35. It's just the fact that they gave guidance at all. Also interesting in Delta earnings was the fact that it was premium, it was international, that was really driving results. It wasn't economy, it wasn't the back of the plane. And when you think about what that says about the economy, how does that factor into how you're thinking about stocks such as Ulta, for example, which I know that you like and which is very reliant on consumers?
It is, and I think Ulta, and we've talked about Ulta on this show before, and I went in and I bought it when there are real concerns around execution. Merchandising wasn't going as well as it had done historically. David Kimball was on his way out as CEO, and we've now got Keisha Stillman in there. And I held on to that stock, and I held on, by the way, even when Berkshire Hathaway went in and then went out. Do you remember when that happened? And I really believe that Ulta could do something around premium products, that what everyday consumers, but also more affluent consumers, want is a destination that they can go to where they can actually feel and touch the product and sample it and try it on in a premium sort of environment. And I think Ulta is delivering on turning around its story by leaning into that. And by the way, it just announced yesterday it's buying Space NK, which is a premium retailer in the United Kingdom. I looked at actually investing in that in 2018. That to me is completely on strategy and a sign of what I think it is capable of doing.
Oh man, you are making me want to talk about M&A. But before we get there, I want to show you another barbell. I want to show you what's happening in the Magnificent Seven, because you see companies going in different directions. I believe you like Meta, but Meta has been up more than 22% this year. What more upside do you see and why?
Do you know, I would describe this as I've been in Meta, we've all been in Meta, right? You have to be exposed to Meta. But I kind of got religion on Meta while I was at Cannes Lions a couple of weeks ago. And the reason is I was with all of these CMOs and these big advertisers and media businesses, and everyone I spoke to, and I said, who is your partner of choice? It was Meta over and over and again for two reasons. Number one, I do separately and independently, I am bullish on what they're doing with their ads in WhatsApp strategy. And I say that because I actually invested separately in a business called Community.com, which is SMS to consumer. Works a lot of sports teams and brands to get text messages to consumer, because we're so saturated with email that our open rates and click rates on things like text, which are more intimate, are actually showing wins. And I do think that Meta will deliver on that through WhatsApp specifically. The other thing is enrollment in Advantage Plus, adoption of their AI tools is going up significantly, and they're just starting to monetize Reels. So Meta, where I was like, ugh, it's run up, it's expensive, I now look at it and say it's trading at roughly 16 times EBITDA. Right, I'm a private equity girl. I've seen take privates happen for businesses without their moat, without their AI capabilities, without their cash flow profile, trade at those levels. And so I look at Meta going, you know what? The valuation, it's not for the faint of heart, but it's not crazy either.
Not for the faint of heart, not crazy. 30 seconds. I have to get your opinion on what you make of the acqui-hire spree, because boy, that looks expensive.
Yeah, it does look expensive, but it's expensive everywhere. And by the way, CapEx is expensive too. So I think they have to do it. I sort of wonder whether it's going to end up going the way the banks have gone and trying to hire these analysts of their private equity programs. At some point, everyone says we've got to stop because we're hurting ourselves. But the war for talent is global. The war for talent is between startups and big tech. And the big money is going to keep getting thrown around.
Yeah, and it's across industries as well, which Shonali knows well. And it's always great to see you. That is Ann Berry of Threadneedle Ventures kicking us off to the opening bell on this Friday morning. Let's take a look at how we're faring about 7 minutes into the session. And I'll be honest, it doesn't look that good if you take a look at the S&P 500. We're down about 0.5% right now. Only 39 stocks are in the green right now, fighting to bring us higher. We have NVIDIA, that certainly helps. Amazon, Costco a little bit as well. These are your biggest points contributor. But then you take a look at the downside, and we have more than 400 in the red, led by Apple, Meta, Microsoft, Broadcom, Tesla. The list goes on. When you have that many big tech names falling, even if just by a little bit on a percent basis, it's certainly going to hurt. And that's what we see at the sector level as well. A big, broad-based sell-off, not a single sector in the green right now. Energy is your relative best performer, still down 0.2%. You go down the list, healthcare, real estate, and materials off by more than 1% right now, Shonali. You add it all together, the index not having a great end to the week.
Yeah, we are ending very poorly today and probably down for the week. So coming up next, we're going to talk about exactly what's happening in some of those sectors, particularly NVIDIA. CEO Jensen Huang making a stop in Washington en route to China. We're going to discuss his meeting with the president next. This is Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back to Open Interest. A quick check on the wipeout underway in the stock market right now. Just about 12 minutes into the session, you can see the S&P 500 down by about 0.6%. Big tech not too far behind the NASDAQ 100, off by about 0.5%. It's the small caps that are the biggest losers right now. They were the biggest winners yesterday, relatively speaking, but currently the Russell 2000 off by about 0.75%. I don't know why I said it like that, but let's get to our top calls. It's some of the analyst action in focus this morning. And first up, Canada Goose getting upgraded over at Barclays. The analyst over there sees better margins and says that the coat maker is, quote, relatively insulated on tariff exposure, which is cute because they make coats. Next up, Freeport-McMoRan is getting downgraded over at UBS. The firm expects a softening in demand and fundamentals. And finally, Texas Instruments is getting raised to a buy over at TD Cowen. The firm says the chip maker is uniquely positioned as the industry cycle improves, but shares off slightly this morning, Shonali.
And speaking of chips, so interesting. You're seeing a turnaround in NVIDIA shares this morning. NVIDIA CEO Jensen Huang met with President Trump at the White House just yesterday. The meeting is just days before Huang leaves for China. He has been vocal about the need for U.S. companies to access the world's largest semiconductor market. Now, Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, joins us now. And it's interesting, we came in this morning with a little bit of weakness in NVIDIA shares. You are now looking at NVIDIA hitting another intraday high. This is a company that just hit $4 trillion in market value. It feels like the love won't stop. What's going on?
Well, I mean, now we await another earnings season, and I feel we are in some sort of an information vacuum when it comes to tariffs specifically, because we know tariffs are coming back. How it's going to trickle down to the likes of NVIDIA and pretty much the entire tech complex, I think we need to hear that commentary from the companies themselves. But look, when it comes to China, I mean, NVIDIA wrote down their China revenue last quarter. The guide completely takes out China revenue. But in the end, when you think about the top players when it comes to LLMs, 5 of them are here in the US, the other 3 or 4 are in China. And those are some of the heaviest spenders on CapEx.
Right.
I mean, just to put it in context, US hyperscalers are spending about $325 billion in aggregate CapEx this year. Chinese hyperscalers are spending less than $30 billion. Still, they have some of the biggest LLMs, so less than 10%. And that's where NVIDIA sees so much potential in selling to China, because they will ramp up their CapEx, and NVIDIA wants to participate there.
And that factors into what I understand Jensen Huang's argument to be when it comes to restricting their chip sales in China, basically saying to the administration that if you restrict us in China, that's just going to allow some of their homegrown chip makers to really rise up and sort of take some of that opportunity.
Yeah, and look, I mean, NVIDIA has been touting the sovereign opportunity. They signed a deal in Middle East. But to me, China is the biggest sovereign opportunity because they have the LLM companies. Everyone else is sort of thinking about creating their own LLM, whether it's, Middle East, India, or in Europe, you have Mistral. But the biggest LLM companies outside of the US are in China. And they are the ones who are constantly training their models, who are deploying their models for all sorts of use cases like ChatGPT type of apps. And so you need the most compute over there. And that's where I think it makes a ton of sense that they want to sell even the deprecated chips to the Chinese market, so at least they can generate some revenue.
Mandeep, we thank you so very much for your time. Happy Friday to you. Of course, it's a busy week ahead. I hope you get some rest. That is Mandeep Singh from Bloomberg Intelligence. And coming up, looking forward to this conversation with you, Katie. BlackRock is launching a new ETF. That's the first of its kind. We're going to speak with Daniel Prince, BlackRock's U.S. head of iShares, next. This is Bloomberg Open Interest.
up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to Open Interest. It's time now for ETF Friday, and this week, BlackRock launched the industry's first ETF that tracks the S&P 500 that excludes the index's top 100 stocks. The idea there being it's a way to give investors diversification for their large cap holdings. But you have Bloomberg Intelligence warning that the fund may struggle to gather assets given that it excludes what have been the world's best performing stocks. And joining us now, I'm pleased to say, is Daniel Prince. He is BlackRock's U.S. head of iShares. So that's the Bloomberg Intelligence view when it comes to this new ETF. What does BlackRock see as the use case for a product such as this?
Well, Katie, great to be with you today. And if we take a step back, over the last year, we've been really committed to building out a toolkit for investors to really navigate the sort of rise of U.S. mega cap and large cap dominance. And what we're trying to do here is really offer investors that precision to really fine tune what has become, the biggest part of an investor's portfolio, U.S. large caps. And as you mentioned, the shape of the U.S. market has really changed with the performance of the top really outperforming the rest of the S&P 500, really needing investors to take stock in how they approach building their allocations. And what our recent launch in the iShares S&P 500, where you exclude the top 100, is that toolkit to really allow you to do that.
How much is this an acknowledgement of the worry behind the concentration in the stock market? When people look around, they say, well, a lot of this is being fueled by the ETF industry, given that, BlackRock has multiple ETFs that track those very popular, biggest names. So what does it mean for market structure purposes to be able to provide that diversification if so much money is just flowing to the top 20?
That's right. I mean, you just spoke to how, mega caps are playing an outsized role in markets today. When you look at the top 20 stocks, they're about half of the S&P 500, and over the last 5 years have drove about 55% of that index returns. You also think about the reasons why that's the case, where, mega cap stocks have these wide economic moats. They've seen stronger revenue growth over the last few years, really showcasing why that performance has been strong. But as you alluded to, when we think about the iShares toolkit, it's about all investors. And what we've noticed is many investors are looking for ways to diversify away from that. They're looking at their exposure in their portfolio and looking for ways to take a step away from that. Whether it's areas like divesting from tech or getting into other, more attractive fundamentals, this is part of the toolkit to help, diversify away from some of that mega cap exposure.
And Danny, I want to talk about this theme a little bit more because I hear what you're saying about diversification, but it feels like BlackRock has really been leaning into just giving you pure play mega cap exposure. I think about some of your products, Top T, for example, that tracks the 20 largest stocks. I'm taking a look at the notes you sent over to our producers, and you actually say that the average advisor portfolio is meaningfully underweight mega caps today. And I have to say, I haven't heard that one before. So just talk about that a little bit, because if you invest in the S&P 500, for example, you're already very exposed to mega caps.
Yeah, that's right. When we took a look at the data, when we looked at asset manager models, when we dove into the analysis around large cap blend active funds, relative to the market, what we noticed is the average was underweight those mega cap names. And what we're trying to do is empower investors to take a view. And ultimately, the goal here is to be more precise within large cap. It's not one monolithic approach to investing anymore. And what we see is our recent launch of XOEF pairing neatly with our existing ETF, OEF, really allowing investors to start tackling U.S. large cap in a more intentional way and in a more modular way, and really looking at their own portfolios. Ultimately, this comes down to tailoring precise portfolios for growth opportunities, but also balancing out the risks as well.
Really interesting. And given that you are the head of product over at iShares, I want to talk about what you would and what you wouldn't launch underneath that umbrella. We have a great big take on the Bloomberg terminal today, and it's all about the rise of leverage single stock ETFs. They've been very, very popular with individual investors in particular. I know that BlackRock has some leverage products, but would you go as far as launching a single stock version?
What I would say is, our mission is to really help investors invest more efficiently. We do believe in investor choice. We do believe in providing greater access, and we provide, making investing easier and making investable more affordable. And we do believe that, the investments that we put out, need that sort of merit behind it, and that they have the quality that iShares stands behind.
So Daniel, is that a yes? Is that a maybe? Is that a no?
I mean, there's areas of the market that we haven't gone for various reasons, and we think about building better portfolios. We take stock in sort of investor outcomes and expectations when it comes to product innovation.
Are you worried at all about what some of these products are doing to the market? There has been a flush of retail interest into what had traditionally been considered pretty risky products, right? Is this a good thing for the market because of investor education, or is it a bad thing because people are taking on undue risk?
No, you really hit the nail on the head. Ultimately, this comes back to investor education and understanding what you own. We do believe in the democracy of investing and making investing more accessible, but we strongly believe that investors need to understand what they're owning and understanding the risks that they're taking inside their portfolios.
All right, Daniel, really great to speak with you on this Friday. Have a great weekend when you get there. That is Daniel Prince of BlackRock. Tune into ETF IQ on Mondays at 12 p.m. New York time. And you can read all about the ETF industry in my weekly newsletter. That is Bloomberg.com/ETF newsletter. But let's bring you some breaking news right now. This coming from President Trump speaking to reporters at the White House. He is due to depart to Texas today. He says that they are treating former Brazilian President Bolsonaro very unfairly. Some comments about Fed Chair Jerome Powell as well. He is saying that Powell is doing a terrible job. We have heard that before, and we will continue to follow that. Just quick remarks to reporters at the White House.
Yeah, and we should say that his remarks are sending the Brazilian real lower, so interesting cross-asset moves on the heels of this dispute, perhaps the most intense between the U.S. and Brazil, being seen as the most intense besides China.
Yeah,
basically.
Exactly, and a real expansion of how this administration is using tariffs. We'll continue to follow that. But coming up in the next hour, Cameron Dawson of New Edge Wealth joins us, as well as Bess Friedman of Brown Harris Stevens. This is Open Interest.
cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jemana Versace in Doha, Qatar, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. We begin with new numbers that show an alarming rise in the number of kids with a dangerous health condition. Reporter Sabrina Cupid has the details from Atlanta.
According to the Atlanta-based CDC, an estimated 1 in 3 teens and preteens ages 12 to 17 have prediabetes. That translates into an estimated 8.4 million young people. It's a condition characterized by higher than normal blood sugar levels that increases a person's risk of developing type 2 diabetes. The nation's top health agency calling this a critical warning sign for the health of America's youth.
President Trump and the First Lady head to Central Texas today, where more than 120 people were killed in catastrophic flooding a week ago. About 170 are still missing. CBS's Jason Allen is in Kerrville.
We're expecting that at some point this afternoon, he is going to talk with some of those first responders, some of those folks who were involved in those searches in the hours after the storm, as well as these days that have gone on looking for the victims, as well as talk to some of the local officials who have been behind this and been coordinating some of these search efforts.
Protesters and federal agents clashed during immigration sweeps at 2 pot farms in Camarillo, California.
Let me tell you, I'm scared, even though that I'm a citizen and everything, but still, I'm scared, really scared.
ICE agents used smoke canisters and what looked like tear gas on the demonstrators. The Customs and Border Protection Commissioner says they found 10 juveniles, 8 unaccompanied, at one of those farms. A 17-year Justice Department official is warning the agency is out for revenge. Patty Hartman, whose job included distributing news releases about January 6th criminal prosecutions, was fired Monday. She tells CBS News.
There used to be a line, used to be a very distinct separation between the White House and the Department of Justice, because one should not interfere with the work of the other. That line is very definitely gone.
CBS News has learned the State Department is about to fire more than 1,300 career diplomats and civil servants as part of the administration's plan to reorganize that department. The Southwest is baking under a record-setting heat wave. In Phoenix, there have been just 4 days in the last 5 weeks when temperatures didn't top 100 degrees. Phil Butler's been keeping a close eye on his plumbing and an air conditioning crew.
We provide umbrellas and stuff for them to keep them in the shade. And of course, I'm out here, make sure everybody's okay. If I see anything that signs of dehydration, we sit them down, we break them.
It got up to 118 in Phoenix Wednesday. Predicted high for today, 108. Numbers from Wall Street. Dow down 258 in early trading. This is CBS News. Accents can get in the way when it comes to artificial intelligence.
Hi, I'm Darcy. Darby Town Council was so proud of Darcy, its new AI assistant. Unfortunately, Darcy had never encountered the Darby accent, as local BBC radio host Becky Measures discovered.
Who do we report potholes to? Because we've got a big one outside here.
Your message was blocked by our content filter. This may be due to language. Local politicians admit Darcy may need a tweak or two.
Darcy, you've been great. Thank you so much and have a great day.
Please wait while I process your request. Vicky Barker, CBS News, London.
A man from East Detroit's been granted his dying wish days after 58-year-old car wash owner Daryl Thomas died of complications from Alzheimer's. His family made it rain. They dropped $5,000 along with some rose petals from a helicopter. It all floated onto mourners below who cheered as they scooped up the bills from the streets. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
And this is Bloomberg Intelligence. Welcome to Fill In Friday. I'm John Tucker with Isabel Lee as Paul plays beach blanket bingo this Friday. The S&P 500 did hit its fifth record high in 9 trading days yesterday. Right now, the major stock averages lower to end the week, and this comes after President Trump ramped up his rhetoric and made a few more threats. Earnings season starting in earnest next week. We'll preview that on today's program. We're also going to debrief Dan Flatley of Bloomberg News on the new tariff threat. Woo Jin Ho, Bloomberg Intelligence Senior Tech Analyst, he's going to be here to deliver his mid-year outlook. And even waiting for this one, how the world's going to spend $500 billion on pets. Yeah, you heard that right. But first, let's get a market reset with Bloomberg's Charlie Pitt.
Thank you very much, John Tucker. Fill in Friday here. We've got the Dow, the S&P, NASDAQ all lower. S&P retreated from yesterday's rally. S&P right now down 26, drop there of 0.4%. This Bloomberg Business Flash brought to you by IBKR. Will the U.S. retail sales growth rate be higher than 1.5% in June of 2025? At IBKR forecast trader, the yes recently at 11%. Start predicting today at ibkr.com/forecast. Last trading day for this contract is July 17th. Bottom line here, stocks retreating from records as President Trump intensifies his trade offensive, sending the dollar higher against most of the world's major currencies. Again, the S&P 500 index off session lows, still down 0.4%. The Dow down 245, down 0.5. NASDAQ lower right now by 0.2%. 10-year 4.40%. 1%, the 2-year 3.90%. Gold is surging $29 the ounce, up by 0.9%, while West Texas Intermediate crude $67.77 a barrel, up now by 1.8%. As for the overall market backdrop, Cameron Dawson is Chief Investment Officer at New Edge Wealth. She was a guest this morning on Bloomberg Surveillance.
There still is so much concern out there. If you look at investor sentiment, if you look at overall consolidated positioning, this is not in a market that is as ebullient as you might expect given where we are with all-time highs. So that just might mean that we have this ever pull higher in markets, even as we get this tariff headline, which seems to be catching people off guard.
Cam Dawson of New Edge on Surveillance. Tesla aiming to bring its driverless taxis to California and Arizona. According to the carmaker's plans for expansion, Tesla shares little changed right now, down less than 0.1%. Recapping, S&P down 0.4. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thanks very much. I'm John Tucker, along with Isabel Lee. This is Bloomberg Intelligence, the Friday edition. Right now, let's take a look under the hood, some of the stocks on the move today. We're joined by Bloomberg's Christina Kino. Friday, so I got my jeans on. Dressing down today.
Yeah,
Can't
well,
see him.
That's good to hear, because I'm going to talk about Levi Strauss, ticker LEVI. So those shares really ramping it up this morning. They have extended their opening gains to more than 8% now, and that's because we did get some really good results from them after the bell on Thursday. They boosted their net revenue forecast for the full year. Company now seeing revenue rising between 1% and 2% for the current fiscal year, which is above the average analyst estimate. And now additional insight from our Bloomberg Intelligence senior analyst Mary Ross Gilbert, saying that the brand is really resonating with millennials and Gen Z and John Tucker, apparently, and growth is accelerating in women's and new categories. I'm sure Beyonce's endorsement also helps, right?
Because when you think Gen Z, you think about me, right?
Exactly.
Yeah. What about Coinbase? Bitcoin is close to 120,000, which is another record if they hit that. What's happening in Coinbase?
Yeah, Coinbase definitely benefiting from those Bitcoin gains, Isabel. So Coinbase ticker COIN. We're seeing those shares up just a little bit today, 0.6%. But I want to focus on a weekly move, right? Because
let's, Isabel, let's Christine, let's first off head to the White House. President Trump on his way to visit the flood devastation in Texas. Before that, he did stop with reporters and had a few comments. Let's listen in.
Maybe at some point I'll talk to him. Right now I'm not. They're treating President Bolsonaro very unfairly. He's a good man. You know, I know him well. I negotiated with him. He was a very tough negotiator, and I can tell you he was a very honest man, and he loved the people of Brazil. He was a very tough guy to negotiate with. I shouldn't like him because he was very tough in negotiation, but he was also very honest. And I know the honest ones, and I know the crooked ones. We're going to see. It was sent yesterday. They called. I think it was fairly well received. It's what we need. So we'll see what happens.
Russian drones hit a maternity hospital in Ukraine overnight.
I know. You'll be seeing things happening.
Now that you got to take that, are you planning on delivering any type of help for undocumented families that lost everything due to Brazil?
I think we've done very well on immigration. We were given a very bad hand by Biden. He allowed 25 million people to come in totally unchecked, unvetted. We're getting the criminals out, and we're getting them out fast. The courts have ultimately done the right thing. Amazingly, they've really done the right thing, and they understand it's really the survival of our country. It's a very important thing. We can't have like 11,888 murderers. And, you know, something that you should have that you haven't reported. As you know, 300,000 children are missing, right? 300,000 under Biden. We've already gotten back 10,000 of those children, and we have a lot more planned to come back. We're getting them back by the thousands, but 300,000, and we've, as of this morning, over 10,000 we've gotten back.
What is your advice to countries worldwide ahead of the upcoming tariff deadline?
Oh, I think just keep working hard. You know, we've been taken advantage of for many, many years by countries, both friend and foe. And frankly, the friends have been worse than the foes in many cases. So I would say just keep working. It's all going to work out.
Jerome Powell.
No. I think he's doing a terrible job. I think we should be, I think we should be 3 points lower interest rate. He's costing our country a lot of money. We should be number one, and we're not. And that's because of Jerome Powell. In terms of interest, we are number one in the world. Look, I'll tell you a little simple language. 1 year ago, our country was a dead country. We were going nowhere except down. We were the laughing stock all over the world. And now we're the hottest country anywhere in the world. We're number one everywhere, anywhere in the world. And that's all they're talking about is our country. 1 year ago it was a dead country. Now it's the hottest country anywhere in the world. Thank you.
All right, President Trump makes his comments to reporters at the White House just before he boarded the Marine One there. The President and the First Lady departing D.C. en route to Kerrville, Texas. They're going to visit, of course, the communities impacted by the flooding. He did earlier sign a disaster declaration for the area. I'm John Tucker. This is Bloomberg Intelligence, along with Isabel Lee.
Let's bring in Dan Flatley to maybe tell us more about that. He's Bloomberg U.S. Treasury reporter. We know President Donald Trump threatened a 35% tariff on Canadian goods and raised the prospect of increasing levies all over the world. So, Dan, the Canada letter is a big shock for the Canadian economy, according to some of our sources. And it does look like the negotiations between Trump and Canada really didn't pan out. So what is the lesson you're learning here?
Well, you know, it's interesting. We had a story last night. My colleague Ed Ludlow and I did some reporting on what Treasury Secretary Scott Bessent was telling some folks at the Sun Valley conference over the last couple of days. And one of the acronyms that Bessent used was, you know, he sort of pushed back on this idea of the taco trade. Trump always chickens out, and he called it the FAFO trade. You know, for people who are spending a lot of time online, you might guess what the first, you know, word there means, but basically mess around and find out. And so I think what is happening here is Trump is trying to give himself some additional leverage as these talks kind of continue and actually in some cases sort of drag on. The deadline has been extended now to August 1st as we're learning, but there are some letters that have gone out increasing and setting tariff rates, and there are some others with Canada, China, Mexico, Japan, others, where deals are still being worked on. And so I think generally when you look at what's going on here, we're certainly going to end up at the end of the day with a higher average tariff rate across all countries that send their goods to the U.S. Where that ultimately ends up with some of these individual countries, I think, are subject to ongoing negotiations. So, you know, there's a little bit of confusion at the moment, but certainly some the president seeking to give himself some more leverage with these talks.
And at the intersection of tariffs and the markets, Dan, the president seems to be emboldened by the fact that we had a record close for the S&P 500 yesterday.
Yeah, it's interesting. You know, I was sort of looking at the markets before I came on and seeing a bit of a sell-off in all of the indices at the moment. But you're right. Yesterday, even as this tariff rhetoric was ramping up a bit, you did see a record close for the S&P, and obviously we've had some records or close to records or records surpassed over the last couple of weeks with some of the other indices. It's a very interesting mix, obviously. I think that there is still a presumption among folks that a combination of cuts from the Federal Reserve and some deals being cut before the end of the year give a bit of a lift to the market in a way that could go sideways if these negotiations, some of these negotiations don't go well. And I would just mention, you know, China as being kind of one of the big negotiations that's still out there. You know, we've climbed down from that really high tariff rate that was set in April, but we could go back there if those negotiations don't go well.
We initially thought China will feel the most pain here, but China and Canada are roughly on the same page when it comes to tariff rate. How do we make sense of this, and what does it look like for China moving forward based on what your sources are telling you?
Yeah, it's a great question. I think you can really only, one of the things that President Trump's advisors, including the Treasury Secretary, really try to underscore in a lot of their interviews and when they talk to folks is that, they offer the president options, but ultimately it's up to the president to decide what he wants to do. And you've seen this with Brazil and President Trump's comments just there a moment ago where he was talking about the targeting of or what he called the targeting of the former president there. So, there is an economic rationale, there's a national security rationale, there's an economic security rationale to some of these tariffs, but there's also an element of personal bias, I guess, is basically the only way to describe it when it comes to what the president wants to do. So, ultimately with Canada or with Brazil or with some of these countries, the president may say, look, I understand what my advisors are telling me with regard to a certain tariff level, but from my perspective, I believe it should be 5, 10, 20 points higher because of X, Y, and Z, and it's different in each case. So, there is a theory of an operating theory for why these tariffs are being used, which we could talk about, but essentially there is also the president's sort of desires on top of that. So you have to kind of take all that into account when you're looking at this.
Is there any indication he's going to taco or chicken out or whatever we're saying?
Yeah. That's a great point because the more that you get away from a well thought out policy or rationale, and the more you get into the realm of more of a classic business negotiation where you're seeking to give yourself more leverage, you do introduce this element of, well, this could ultimately be reversed at the end of the day. And we've certainly seen some U-turns along the way. And yeah, I don't think it's possible to really rule out the idea of Trump backing off of some of these higher tariff policies at this point. But it's also not quite correct to rule that out entirely or to rule that in. It's a very fluid situation.
We have around 40 seconds left, but how much opposition is there to smooth out these policies from the Democratic Party? Because if the economy doesn't roll over and if the income from the tariffs do offset deficit, then who will lobby against these?
Yeah, it's a great question. We were expecting the economy to do certain things coming into these trade negotiations and these high tariff rates. Some of that has happened. Some of that hasn't happened. We're expecting to get an update on the revenue brought in from tariffs later today from Treasury. So I think that there certainly is a lot of opposition to these tariffs, whether that could be operationalized, mobilized, whatever you want to call it at the end of the day. Kind of depends on how all this plays out.
Hey, Dan, thanks very much. Dan Flatley is our Bloomberg U.S. Treasury reporter with the update on the tariffs, reporting from Washington, D.C. It takes us at 10:20 on Wall Street, and let's get a market reset right now. To do that for us, here's Charlie Pell.
All right, I thank you very much, John Tucker. Here's what's going on. This Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. All about tariffs in today's trading session right now. Stocks retreating from records as President Trump intensifies his trade offensive. Stay with Bloomberg for the very latest on any developments out of Washington. We got the S&P right now down 21,62.59, drop there of 0.3%. The Dow down 245, now lower by 0.5%. Nasdaq lower than less than 0.1%, down 18 points. Our Mag 7 index, though, advancing up 0.1% with the 10-year at 4.40%, the 2-year 3.89%. Spot gold is up $27 the ounce, up 0.8%, and a surge for West Texas Intermediate crude oil up 1.9% right now, 67.84 a barrel. Briefly, Levi Strauss shares now surging by 11.1%. Levi higher after raising its revenue outlook, with the maker of 501 jeans expecting sales growth to outweigh the effect of President Trump's tariffs. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks very much. It is 10:22 on Wall Street. This is Bloomberg Intelligence. I'm John Tucker, sitting in for Paul Sweeney. She's Isabel Lee. And we're talking about tariffs today, but lo and behold, earnings coming up real quick. Shanna Sissel is President and CEO of Banrion Capital Management, joining us from Chicago right now. Stocks are expensive, and I got to wonder, with the earnings season upon us, is E going to justify P?
You never know. It depends on how accurate those E's are in the estimates. We continue to see fairly conservative earnings estimates from the street. And so what has been consistent since the pandemic is that there's always consistently higher than average earnings surprises. So I think the wild card here is the continued uncertainty related to the tariffs and how that affects some of the biggest drivers of S&P earnings, those Mag 7 names, because many of them are multinational. But, it's hard to really tell because, we thought it would impact everybody in the previous quarter, and it really didn't. But, when we think about that, it really comes down to the conservative nature of street estimates.
Shauna, how political do you think markets are going to get in relation to the Fed, especially in the second half of the year?
Well, they haven't been political as much as one might expect, especially when it comes to pressure on the Fed. I don't expect to see the Fed cut like everybody else does because the economic data simply suggests that even with higher rates, the economy is doing quite well. But again, the tariffs are the uncertainty, and that's also the wild card in the Fed decision. But the politics, I think, have less an effect this time because as it pertains to Chairman Powell, it's a known fact that he's not going to come back for another term. So he's under a lot less political pressure because he's not worried about trying to save his job.
Okay, so what replaces Powell in terms of policy adjustment?
Well, that I don't know the answer to. That's not really something that I've been focused on.
You can guess.
I could guess, but then it would be on the record, and people would be able to look at this interview when I'm wrong and be like, "See, you were wrong."
Well, they do that with me and Isabel all the time.
Throw something at yeah. I mean, that's the downside of having receipts for what people say. But yeah, I really haven't spent a lot of time worrying about that. We're really focusing on managing client portfolios for volatility and not really worrying about what might come after Chairman Powell. So that's like a year from now.
The consensus seems to be in a change from earlier this year in terms of recession calls, that maybe not recession now, but slow down. The idea of no recession, does that mean you definitely got to buy stocks at this point?
I don't necessarily think so. I think volatility is here to stay. And so I'm focusing on ensuring that client portfolios are allocating to things to manage and dampen volatility. And that isn't stocks. But what it does do is kind of take money that would normally be allocated to fixed income and put it into things like alternatives. And that allows us to get potential upside, in case I'm wrong, in equities, because you can take a little more risk in higher payout opportunities. But for me, it's really about managing volatility, because I think the one thing that we know for sure is that with all the uncertainty and the tariffs, the way that this administration goes about its business, it just essentially sets us up for higher volatility being part of what this market is going to be for the foreseeable future.
How do you volatility-proof your portfolios? Because you're focused on that, and we're really seeing a lot of that. It seems like there's no slowing down when it comes to headlines and market gyrations. What does that look like for you?
So for us, that's using alternative investment products. And the good news is for the average investor, there's plenty of opportunity. This year alone, the vast majority of new ETF launches have been in the alternative space, whether it be creative buffers, lots and lots of creative crypto ETFs, long, short. Many of our largest ETF issuers like iShares and Fidelity are launching alternative product like the Bridgewater product and the private credit product that State Street has. Fidelity just launched a managed futures product. I think that tells us that our largest asset managers are out there understanding that demand is there for products that have low correlations to traditional equity and fixed income. And so that's how I'm looking at it. So I'm looking at products that have low correlations, and that is going to dampen volatility and help manage risk in client portfolios in a period of time where there's a lot of uncertainty and an increase in average market volatility as a result.
Can you say specifically what it is you like for your clients? Give me some specific examples.
Absolutely. So we manage a core alternative ETF model. And so some of the things that we really like right now are long short equity. So something like CBLS, which is a cloud hedged equity strategy. It's an active long short product. BTAL, which is an equity market neutral fund, which, in full disclosure, can be quite volatile in and of itself, but it does well when volatility is high. When you take another look at things like managed futures, so like a CTA, or I even like some of the Bitcoin type of strategies like BEGS, which is Bitcoin and gold and silver and other precious metals, where it's more tactical. So those are the kind of things that I'm looking at, things that are really not equity or fixed income per se, and that are managing downside risk. But also with like a CBLS, that gives me the potential to benefit from good stock picking. As equities are more of a stock picker's market, we've seen active management do better than passive management.
How much of the U.S. rally is really just about tech over-concentration? We have, again, the biggest stocks comprising 40% of the market. That's a new high, versus growth prospects, like actual growth in the second half of the year.
I think a lot of it is driven by that. In fact, if you looked at some of the stock picks I sent over to you guys, it's heavy in the tech sector. I'm on the record for years now as being a massive NVIDIA bull. And I think that long-term trends, particularly as it relates to AI, are driving that and overcoming a lot of other negative news as it pertains to the tech sector and tariffs and any sort of export controls. So that, I think, is driving the market. If you look underneath into the individual stocks that are driving the returns of the market in this rally, it is mostly tech names. And so it is not necessarily growth that is helping this market move forward. It is really longer term trends where people are trying to take advantage by looking at the winners of something that will pay off, say, 5-6 years from now. And the growth in the U.S. has been quite muted, but it has been stable. So that's kind of the conundrum we find ourselves in. That's the conundrum that the Fed finds itself in, is that the growth is there. It's not particularly strong. It is being driven by, concentration in certain sectors, but the concentration is actually a tailwind as a result of this AI trend, less so than just, people having FOMO.
Shanna, always a pleasure. Appreciate it. Thanks for showing up today. Shanna Sissel, the president and CEO of Bandrion Capital. You know what time of the year it is? It's time for the mid-year assessments for the global communications and network equipment specifically. Who better to do that than Woo Jin Ho? He's the senior technology analyst from Bloomberg Intelligence, and joining us on this Friday morning from our campus in Princeton, New Jersey. All right, mid-year update. So what's the update, Woo Jin?
Well, I will tell you, look, the fundamentals are actually fairly positive. You have AI drivers driving certain names like Arista Networks and Celestica, and also the enterprise campus switching and the data center switching have upgrade drivers as well. That's going to benefit someone like a Cisco and an HPE. Now, the issue is, and your prior guest was talking about tariffs and export restrictions. Tariffs actually really spooked me out. And does that throw a monkey wrench in enterprise IT spending into the second half of the year and temper the growth and earnings expectations?
So how much could tariffs and economic uncertainty really trip up the global networking sector sales in the latter half of the year? Do we have a number in mind?
Yeah, don't have a number in mind. There's a couple of things. The networking sector has actually done a very, very good job in managing and navigating tariffs, right? From a sales perspective, we really haven't seen estimate cuts as a result of it. From a gross margin perspective, we're thinking about 100 and 200 basis points, and that's already reflected into consensus expectations. What I don't know right? But there are a lot of enterprise IT spending surveys that are out there saying that they are going to start potentially siphoning off some of their spending plans. One of the things that I will say is that enterprise networking tends to be a more mature and commoditized market. So if there's going to be a couple of areas of spending that could be curtailed, PCs obviously, but also networking would be second in line.
Hey, Woojin, we've been making a big deal about, well, it is a big deal that NVIDIA crossed the, $4 trillion market cap.
Yep.
Can that be sustained given what you just said? Let's talk about the multiple expansions.
Sure. So I'm not the NVIDIA analyst. I can talk from a high level in terms of what's going on in NVIDIA, as well as some of the drivers to earnings growth. If we look at some of the AI initiatives that are going on, whether it's by the hyperscale cloud guys or some of the sovereigns and these neo clouds like CoreWeaves, they're building out these 100,000 GPU type of installments. This is lasting, based on my work and my colleagues' works, this is lasting over the next couple of years. The only gaming town for high-end GPUs to train AI models is NVIDIA. So is there sales momentum as well as earnings momentum to support it? Yes, there is for NVIDIA, as well as the rest of the supply chain.
In the note, you mentioned, or it was mentioned, that we aren't seeing any trade overhang risks when it comes to demand in the latter half of the year, and they aren't really reflected in consensus and in valuations. Why do you think that's the case?
Yeah, I don't know, right? I think what happened was after following the first quarter results, the companies have not yet really fully reflected the tariff impacts into their expectations, and consensus have carried that through the rest of the year. There has been very little indication after following first quarter results with regards to a pullback in demand, or more importantly, a pull forward in demand that's going to affect the second half. So, my guess is that I'm waiting for what the second quarter results are going to tell us in terms of the second half.
Wooj, thanks a lot. Appreciate it. Woojin Ho, the senior technology analyst from Bloomberg Intelligence, joining us there from our Princeton, New Jersey campus. And lo and behold, some of the earlier declines in the major averages are starting to peter out right now. We're paring those losses. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all very much in the red. However, we are off session lows, looking at a 19-point drop right now on the S&P, 62.61, retreating from yesterday's record, down now by 0.3%. Right now on track for a losing week for the S&P. We've got the Dow down 236, down 0.5%. NASDAQ down 9, a drop there of 0.1%. Your 10-year 4.40% with a 2-year currently yielding 3.89%. Gold up $33 the ounce, higher by 1%, 33.57 the ounce. West Texas Intermediate crude up 2.5%, 68.21 a barrel on WTI. And look at Bitcoin, $117,000, 117,856 on Bitcoin, surging right now by 3.8%. Up next, earnings will be the focus for markets. Shana Sissel is founder and CEO of Banrion Capital Management, and she was a guest moments ago right here on Bloomberg Intelligence.
I think the wild card here is the continued uncertainty related to the tariffs and how that affects some of the biggest drivers of S&P earnings, those Mag 7 names, because many of them are multinational. But, it's hard to really tell because, we thought it would impact everybody in the previous quarter, and it really didn't. But, when we think about that, it really comes down to the conservative nature of street estimates.
Shana Sissel of Banrion interviewed right here on Bloomberg Television. Well, next week, certainly the earnings train goes express when we hear from J.P. Morgan Chase, Citigroup, Wells Fargo on Tuesday. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks very much. We appreciate it. And you know what? Start a conversation at any cocktail party. Just talk about real estate. Everybody gets involved.
Yes, especially rent for a renter like me. Every year, I just feel like it's increasing.
And the opportunities to buy just keep diminishing
2-0.
Let's talk real estate and other stuff right now. Bess Friedman is the CEO of Brown Harris Stevens, the real estate company. I actually want to start in Florida. I've heard all these predictions like bubble, it's blowing up. Real estate in Florida. Is it still a thing?
It's still a thing. The market in Florida has been growing. I was just mentioning about Palm Beach. I mean, the inventory is so tight there, and anything that comes on the market, people are bidding on. It seems that a lot of even New Yorkers have decided to move to Florida, and businesses, as we know, have opened up in Florida. And so I think that's going to continue. And the market is really strong there in Miami and Palm Beach, where we have offices.
And Manhattan rents, we talked about it off air. It hit a record high for the 4th time in the past 5 months. We know that summer is really the time of the year that's the hottest to move. I mean, we all know that if you move in winter, it'll be a little lower. But then where is the relief here? What should the city done or the broader market? I know it's probably $1 million question.
No, I mean, that question comes up all the time because people want to be able to afford to live here, to go to work and do those things. And I think we have to have responsible legislation. I was just talking about there was legislation passed by City Council, the FAIR Act, the Fairness and Expense Rental Act. And that act has shown that rents have gone up about 15% since that was passed June 11th. Because they put the onus on brokerage fees on the landlord. And I think we have to work in a way to make sure that landlords and tenants can work together and people can make choices. And rents have been going up because the buying possibility has become unaffordable, and also rentals are now becoming unaffordable. So, I think there has to be a way for people to be able to live in New York City, pay the rent, and the challenge has become overwhelming as of late. As you just mentioned, some of the anchors said they moved to New Jersey because of it. And so we need to create more things like the City of Yes.
You wrote in the note that the surprising win by Zoran Mamdani in the mayoral primary has introduced new stress and uncertainty for the sector. How would a citywide rent freeze or expanded affordable housing mandates affect new development pipelines? I mean, and I guess investor interest in the real estate in New York?
I think the challenge is going to be that a lot of developers, it's going to be pencils down. I don't think they're going to be willing to work and stay in the city if they don't think that they can build and pay bills and do things that has to make economic sense for them. And so I think the challenge is going to be that a lot of people they're talking about not staying in New York City because of that. So we want to be pro-business, pro-working class, pro-everything so that people can work together. And I think the concern in the real estate community is some of these policies like rent freezes would create so many challenges that landlords wouldn't be able to make improvements, get new air conditioners for tenants and do the things they need to do. And we don't want that to happen, you know? And so I don't know what the solution is, but I think we have a challenge ahead.
The New York City's elite, are they afraid of Zohran Mamdani and what's going to happen to New York City?
I mean, I think...
Are they packing their bags just in case?
I mean, I'm not a voice for the elite, but I do think there is huge concern, not just amongst the elite, but in general. I think for even working class people, there's concern because if you have things like free buses, you have to remember that teachers take the bus, lawyers take the bus, everyday people take the bus, and if they're free, there's going to be loitering, people sleeping there, it's not going to be safe. So these policies confer status on Mamdani and make him look like this great guy, but the consequences really impact the working class. So I think it's concern about safety, it's concern about many different things, not just the elite. I think the city as a whole is concerned, but he ran a great campaign. He knocked on 16,000 doors, he was on social media, he did everything right, and that's why he won the primary. And so now the race is really up in the air to see what happens, but he has incredible, speed ahead of him.
And we know that rent freezes, they're always a divisive topic. If you got an apartment that will benefit from this, you're happy. But if you're the landlord, you're not, because how do you operate? I've seen a lot of videos viral on social media of apartments just sitting still because it costs so much to renovate them, but then it costs so much to renovate them, so the landlord just chooses not to. So it's just sitting there. And we're in New York City. That's why at 30, you still have a roommate. What do you make of that? I mean, right?
It's not ideal to be at 30 and have a roommate, but it's okay if you do. Look, I think there's also this sort of negative stigma, which I wish we could stop, that landlords are bad and tenants are good. There are a lot of landlords, I know plenty of landlords that are here that are immigrants that came from other places, bought a building, they live in the building and they rent out the other units, and that's how they pay their bills and put their kids through school. So I think we have to stop demonizing landlords as the bad guy and figure out ways to sort of collaborate and have discussions. Like I mentioned the FAIR Act, had they listened to us and had healthy discussions with us, we would have prevented, I think, something that was really irresponsible. And you're seeing the negative impacts on rentals right now. So
that's the affordability issue. Can you speak to us about what you see as the economic backdrop in all the areas in which you operate?
For us, affordability is still somewhat of a challenge. In New York City, we know it's a discretionary market, so it's a little bit different. Inventory is steady. Prices have been fairly flat. So movement has been, actually the second quarter in New York City was really solid. But this is not the rest of the country. The rest of the country has other challenges regarding affordability. Palm Beach is not the rest of the country. I can talk about markets that are more discretionary, where people have more income and can afford to do a refinance or buy a second home, whatever it is. But most people in America are not in that position. So this market, the discretionary market, has performed fairly well and has been doing well because sometimes it's an all-cash buyer and rates are not necessarily impacting them in the same way it would for other people.
If rates and prices are starting to soften slightly, but buyers are still on the sidelines, what signals do you think they're waiting for? What are you hearing from the ground?
I think that the issues continue to be rates, inventory, and prices. Prices being number one, because in the last 2 years, prices have slowly been going up. And so I think buyers feel like they've been priced out of the market. They can't afford to buy a first-time home. The prices have crept up. Rates are higher, so they can't afford to make their nut each month by buying it. And so I think that remains a big challenge and something we have to think about in this country, how to build more affordable housing and how to make it accessible to people so they can have the American dream and have something for an investment for their future. Because that's what buying your home is, an investment in your future.
Do you use Zillow to check out houses?
Yeah, I mean, I was just saying this.
That's my hobby.
Zillow is where everybody goes to look because it's an aggregator site.
Oh, it's just everybody's doing it.
Everybody's doing it.
Even Bess Friedman.
Even Bess Friedman, because if you want to find something, that's where everything is housed. And there are some brokerages that are trying to avoid that, but I don't think you can.
Bess Friedman, Chief Executive Officer at Brown Harris Stevens, the real estate firm. And looking at the markets right now, the major averages slightly lower. This is Bloomberg Intelligence.
Listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
And of course, it's Fill-In Friday, so I'm John Tucker. Paul Sweeney's not here. Isabel Lee, she's here. Do you have a pet?
I used to growing up, but now I live alone. I used to growing up, but now it's hard in New York City. You have to take them out in the morning, at noon, after work, and for some, even before bed. Do you have a pet?
Used to, but
used to. Same
I was so upset when we lost her that I can't bring myself to replace her. Well, that's a bummer. Diana Rosario Pena is our consumer staples analyst, and she's here to tell us about just how much we spend on pets. It's like a staggering figure, isn't it?
Yes, and it's going to keep growing up over the next 5 years. We expect globally that the market might reach about $500 billion by 2030.
Oh, only $500 billion.
That's it.
What in God's name are people's? I mean, yeah, it's obvious dog food and stuff like that, but is there anything else I need to know about, like dressing their pets up in little crazy costumes and stuff like that?
And little boots.
Little booties.
Yes. So there's been a couple of things. Food remains the biggest expense for pet ownership. It's about 30-40% of the expenditure. But there are other things that come with owning a pet. Now people are more willing to get into discretionary, vests and shoes for their dogs. And crates and the things like that. Also, healthcare is a big thing. People are more willing to spend more on the healthcare of their pet than they used to.
Why is that? Is it because more dogs are getting sick, or is it more because of the insurance company? Like, why this trend?
Well, it's a couple of things. First of all, the humanization of pets. Now people consider them as family, so they're willing to spend a little bit more to, you know, keep their family member around. So there's a greater acceptance of that kind of attitude.
And who benefits the most from all this? What particular companies? Yeah, I think, what did we used to feed our dog? The
Human food, actually, when I was younger.
No, you don't feed them human
Well,
food.
yeah, maybe that's why my dog wasn't the healthiest.
Well, human grade food, I will guess. So it really depends. If you're looking at food, the big food companies, Nestle, Colgate, Mars, General Mills, they have, you know, food offerings in different price points. But on the more premium side, you have things like Fresh Pet, that they have the fresh frozen, which is really like human grade food that you just, you know, take it out of the fridge and you give it to your dog.
We know that
like Isabel.
Yeah, sadly, I shouldn't have said that. So we know that Americans love their pets, and everyone knows that. To your point, people are delaying having children because they have pets, or in part because they have pets and because the economy is tough. Where does the U.S. stack globally?
Yes, so we're still about 40% of the market. You know, we're probably going to grow about 35% compared to like the 38% that we expect over the next 5 years. So we're still going to be the biggest, the most mature part of the industry. There's others that might grow faster than that. There's other regions outside of Europe and the United States. However, that size of the pie is smaller, obviously.
You know, it's not just dogs. There was a fascinating Bloomberg profile of a guy, I think he must have been Florida, who sells designer geckos. And some of them fetch a fortune, like $5,000 for a little gecko. What's the most popular pet? Is it the dog?
It's still dogs and cats, you know, and that is like mainly, you know, where we focused on. Of course, there's like others like hamsters and cobras and things like that, but that doesn't.
By the way, just parenthetically, don't put the hamster near the cobra.
Oh my, fish is also, I don't want to imagine
that should seem obvious.
But fish is also fun. I think it's good training for young kids. You know, they just feed it once a day. The cleaning of the aquarium is always tough, though.
Yeah,
don't
it shows
smell
them
that.
responsibility for sure.
Okay, so we know that e-commerce sales, you wrote in your note that in the U.S. it might reach 27% of the total from 20% in 2020. So we have that, we have the pharma market, we have the food market really just growing. What could be the hindrance here? What headwinds are you seeing in this space?
Well, we actually see certain pockets of the market being a little bit more conflicted, particularly in the past year. Discretionary spending, you know, we did make fun of the vests, and even, you know, popular fashion brands are expanding their you know, their names into pets. But that part of the spending has been a little bit subdued, I want to say. And part of it is because the population, the pet population, has been, you know, not growing as much as they used to, like back at the beginning of the pandemic. But another thing is obviously economic, you know, the economic situation. People are curbing their spending, so that is like one of the first few things. In terms of premium, we still think it's gonna premium food. We still continue to think that it's probably going to get to 57-60% of the food in the U.S., like the overall food. But the cadence is probably going to be more like 27 on rather than shorter term. We think people are going to probably get with kibbles rather than, you know, the fresh frozen part.
Diana, thank you. Diana Rosario Pena, the consumer staples analyst. How the world is going to spend $500 billion on their pets. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM and Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM, Channel 121. It's presented by Oracle. And stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
And good morning. I'm John Tucker in for Paul Sweeney. This is Bloomberg Intelligence. I'm here along with Isabel Lee this Friday morning. Major stock averages right now seem to be pairing some of the earlier losses as we end the trading week. This comes after President Trump ramped up his rhetoric and made some more tariff threats. Earnings season starting in earnest next week. Investors also hoping to get a clearer picture on the impact of tariff. Coming up on today's show, we'll take a look at deal news. Performance Food said to draw some takeover interest from U.S. foods. And also we'll head to Washington, check in with Nathan Dean, the Bloomberg Intelligence Senior Policy Analyst, on the latest on tariffs and all the political news out of the nation's capital. But first, let's get a market reset. And to do that for us, here's Charlie Pellet.
All right, thank you very much, John Tucker. Happy Friday. You mentioned performance in U.S. foods. Right now, performance is up by 5.1%. U.S. food trading higher by 0.2%. This on a day when the Dow, the S&P, NASDAQ are all retreating. Right now, we got the S&P down 21, a drop there of 0.3%. The S&P was at a record yesterday at 62.59. Right now, the Dow down 258. Down 0.6%. NASDAQ lower by 27, a decline for NASDAQ of 0.1%. Bottom line here, losses on this Friday. We are on track for a losing week on the S&P. Interestingly, though, the Mag 7 index, the Bloomberg Mag 7 index, up now by 0.2%. 10-year 4.40%, with the 2-year that's currently yielding 3.89%. Gold surging $38 the ounce, up 1.1%. 33.62 for spot gold. West Texas Intermediate crude surging 2.5%. 68.23 a barrel on WTI. And what a story with Bitcoin. A record today, right now at 117,860 on Bitcoin, pushing higher by 3.7%. As we have been reporting here on Bloomberg Radio, we got bank earnings big time next week. JPM, Citigroup, Wells Fargo, among the names reporting on Tuesday. Erica Najarian is an analyst at UBS.
What you're seeing in the regulatory data right now for loan growth and what you're seeing in industry data for investment banking is that June was a super solid month. In fact, we haven't quite had this start in first half loan growth in some time. And so you're going to have a pretty decent result. And you're going to talk about strong pipelines in the second half of the year.
And, of course, Bloomberg Radio is going to be all over those bank earnings, especially when we get J.P. Morgan Chase breaking on Tuesday morning. J.P. Morgan Chase down 0.6%. Citigroup right now down 0.9. Wells Fargo, we're going to call that unchanged on the day. Recapping here, stocks lower. S&P down 21, down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thanks, Charlie. Let's take a look at some of the stocks on the move today. Closer look. I'm John Tucker, along with Isabel Lee, and we're joined by Bloomberg's Christine Aquino. Mirror, mirror on the wall, who is the richest of them all?
Well, NVIDIA for starters, John. So all the investors that are invested in the stock definitely having a good day today. So ticker NVDA, those shares are up just 1.7% at the moment. So pairing some of those opening gains, but it did hit a record intraday high on Friday. That comes really a day after CEO Jensen Huang met with President Donald Trump, according to people familiar with the situation. No details have emerged on the talks, but it does come auspiciously before Huang's planned trip to China. And we know that the NVIDIA CEO has called for easing U.S. technology export curves because they have effectively locked NVIDIA out of China, a very important market for them, and they just haven't been able to get an edge over their rivals like Huawei. So we'll see how that plays out, but Huang's going to be in China following that meeting. So there you go.
What about Coinbase? A couple of headlines coming out of.
Absolutely, Isabel. So yeah, we did see those gains earlier, right off the bat, probably still benefiting from the Bitcoin move, right? As Charlie Pellet mentioned earlier, that's still trading near a record high, 118,000. But, you know, Coinbase ticker COIN at the moment now losing some altitude on the day. Shares are down just over 1.5%. But, you know, on a weekly basis, it is still set for a gain of just over 7%. That is the fourth straight week in a row, longest winning streak since February 2024. It did, however, get downgraded to sell from buy at H.C. Wainwright just yesterday. And analysts are saying that even though it has, it's still a best of breed crypto exchange, the valuation has outstripped near-term fundamentals. And perhaps that's a little bit of what we're seeing today.
You know what they do at my local McDonald's when you pull up to the drive-up window? You order, you pay, then you go to pick it up, and the person at the pickup window says, oh, you got to go park over there. We'll bring it out to you.
Really?
And like 15 minutes later, they show up with your Big Mac.
It's a drive-in
I can't
park.
stand that. What's happening at the world's biggest restaurant chain?
Yeah, the world's biggest restaurant. I prefer my McDonald's brought to me, by the way. I don't drive to get it. But anyway, that's just me.
Oh, well. Pardon me.
But McDonald's ticker MCD doing well today. Shares up just 0.6%, pairing some of those opening gains as well. But we are seeing it benefiting from an upgrade at Goldman Sachs. Analyst Christine Cho upgraded a company to buy from neutral. We did see, you know, year-to-date sales performance for just fast food operators in general. That has been under pressure because low-income consumers and middle-income consumers struggling a little bit right now. But Goldman analyst Christine Cho is saying that McDonald's ultimately has to scale. It has the marketing. It has the digital advantage to successfully navigate through this environment.
All right. Thank you very much. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Christine, thank you very much. You know, if you drive in early enough to work, you get to see their trucks on the roadway making deliveries to restaurants. Performance Food Group and U.S. Foods.
Oh, you see? No, I
see them all the time.
I don't come as early as you. I should probably.
Anyway,
but you come in at 3 a.m.
There's like talk about a possible deal takeover one by the other. Crystal C is our U.S. deals reporter. Who's taking over who? Do we know, or is this just rumor at this point?
So we are reporting that U.S. Foods has made and has shown interest in a tie-up. So the companies are actually pretty similar in size in terms of enterprise value. They have a lot of debt, both of them. So at this point, it's early. We don't know who's taking over who just yet. But what we know is if this deal does go through, or if this deal does go ahead, it will face a lot of regulatory scrutiny, and eventually the goal is to combine the company into a company that has like $100 billion worth of revenue.
Do we think it's more about scale, margins, distribution overlap, or just really fending off Cisco?
So Cisco is actually currently the number one. The top 3-4 players.
We should point out that's Cisco with an S.
Cisco with an S, that's right. And that actually, I see those trucks more than I see the others, at least in the city. So Cisco, US Foods, Performance Food, they all have their moment. Like in the past decade or so, actually, they have each like taken top spot, and it's moved around. So there were moments where, you know, they have had activist attack at various different points. So it's interesting that this is the moment where you see that US Food is performing better than Performance Food, despite the name. So it's going to be a very challenging deal. In 2015, when Cisco and US tried for a tie-up, that deal got struck by antitrust. So it definitely is a market where scale matters, margin matters. You can combine regions, you can combine your fleets. So all of those things make it a very good synergetic
The margins right now are like you said, the razor thin, right?
So it depends on the market that you service. Like depending on whether you're going after restaurants, is it cafes, or is it like
I should back up.
schools?
What do these companies do? They prepare food, or they bring? Explain that.
So there are various different things that they do. It comes from they do produce, they do prepared food, and they supply to places like restaurants, hospitals, schools, hotels. So depending on your end customers and what your products are, the margin's slightly different. Also, it means your production would be different and it impacts costs. So I'm sure there is in these CEOs' head the dream combination of, you know, what the composition of each product or each geographic should be. And well, in this case, US Food clearly thinks that a tie-up with performance would get them closer to that ideal business portfolio.
And regarding the why now, do you think it has something to do with softer regulations with the Trump administration as compared to the Bidens?
Yeah, that's definitely one big concern. It is a very consolidated industry. So my gut feeling is either way, under whatever administration, it will be looked at by the antitrust. That said, the M&A dealmaker had been expecting 2025 since the inauguration day that this would be a much friendlier M&A market under President Trump, and Liberation Day hit, and that put a lot of things on pause. In the past month or so, we have seen people warming up to the idea of exploring deals or pulling triggers. So there is an element of a friendlier regulatory environment.
All right, Crystal. Appreciate it. Crystal Said, the U.S. Deals reporter from Bloomberg News, talking about Performance Group attracting a takeover interest from U.S. Food. Again, this is a potential deal could create a distribution company with combined sales of something on the order of like $100 billion. Let's move on to our next guest. The topic from Washington, D.C., tariffs. Tariffs and more tariffs. Nathan Dean is senior policy analyst from Bloomberg Intelligence, joining us on Zoom from Washington, D.C. The threat, how big of a threat is this? Or, we've heard about Mr. Trump always chickening out. What can you ascertain at this point?
So I think what we're saying is that there's a certain uncertainty, and that uncertainty is that, again, we're facing a deadline of August 1st where we really don't know if President Trump is going to move forward with these tariff threats. First it was Liberation Day, then it was July 9th, now it's August 1st. But what we can say is, and this is what we're telling our clients, is that even though this process is going to continue to play out, a lot of it determines on the negotiations. So we're telling our clients be very close to the news cycle, because if negotiations go well, you see further exemptions. If negotiations with other countries, for example, the European Union, we're hearing from Bloomberg News that there could potentially be some news around that. If negotiations don't go well, that's usually what brings forth these announcements for President Trump that these tariffs are going up exponentially 20, 30%. I would also just say that there's a little bit of difference, though, when it comes to Brazil and this idea of this 50% tariff on Brazil. It's not so much a policy question, it's more of a political question, because President Trump often, brings up former President Bolsonaro's, cases in Brazil for a reason for that tariff. So I would just say is the Brazil-U.S. relationship is a little bit different because of that question. But again, for most of our clients, they were preparing for July 9th. Now they have to prepare for August 1st and potentially even further beyond that.
Yeah, so now you can impose tariffs on another country or on their goods coming into this country, not just because of a deficit, but for political reasons.
Yeah, and that actually
we've crossed the Rubicon at some point.
Well, and that brings up an interesting point here, because let's talk about how President Trump is implementing this tariff. There are various different ways that presidents can implement tariffs. If you ever hear people in the news say Section 301 or Section 232, what they're talking about is an investigation by the U.S. Trade Representative or the Department of Commerce, and investigations take time. But what President Trump is using in this case is called IEPA, the International Emergency Economic Powers Act. Now, there has been court cases going against President Trump for usage of IEPA, and just amongst the analysts chatter that we had this morning, our lead litigation analyst Holly Fromm isn't exactly sure that IEPA is one of those ways that President Trump could implement tariffs when you're using President Bolsonaro's, cases as a reasoning here. So, again, these court cases are going to continue to play out through the next few weeks and months. Nothing says that President Trump can't just change it from an IEEPA tariff to a Section 301 tariff, but that brings time, that brings a process, and that gives some additional time for negotiation between those two countries.
Markets are generally just presuming that Trump's new rounds of letters is status quo, and there's the August 1 big deadline. What is stopping Trump from following through?
Well, nothing. I mean, obviously, President Trump, there's lots of talk about, taco. Trump always takes chickens out. Treasury Secretary Scott Bessent was just telling individuals this week, I wouldn't exactly say that. I would, I'm not sure I would actually buy that. Giving a warning to market participants that there potentially could be a time in which these tariffs move forward. But we will also say is that, we do not think the president wants to implement tariffs in a way that harms the U.S. consumers. For example, we saw this negotiation with Canada, the letter with Canada. USMCA goods are not impacted by that additional 10% tariff on goods from Canada. So as a result, the impact on U.S. consumers isn't going to be all that much. We've always taken the approach that, President Trump is going to try and continue these negotiations in a way that doesn't harm individual consumer spending, that you would see it like the Targets and the Home Depots and the Walmarts and so forth. For example, obviously there's a new tariff on tomatoes coming in from Mexico. That potentially could raise prices. So we do think that if you see prices change at the grocery stores and at the Walmarts and the Home Depots, that's when President Trump would ultimately say, maybe we should pull back. Maybe we shouldn't move forward with this.
Put on your lawyer hat. Give me the update. I mean, we heard from the Court of International Trade in Lower Manhattan. Where do the court proceedings, where do they stand right now, the challenges?
Well, they're continuing. And the worst thing for market participants is that courts just don't take, they don't move very quickly. Obviously, President Trump can go out on Truth Social and he can change the narrative and the tariff debate. But then you have courts that actually were going to take time. Now, the Supreme Court eventually could get this case. Our analysts think that could happen as soon as this year. But, we're talking about something later this year. We're not talking about something where, the market participants want that certainty almost instantly. So even though you have this, these court cases going in the back of your mind, we actually have to deal with what President Trump will do in the interim and what he'll do in the short term. And that's why we consistently go back to this idea that there will be uncertainty up until August 1st. You will potentially see, if negotiations aren't going well, another heightened headline risk opportunity. But then ultimately we will see, I think, a more of a status quo where the markets are going to be like, okay, we understand where President Trump's going with, but again, it's not really going to shock the system.
And certainty is a key theme markets are really looking for, or just really yearning for. And a certain 25% tariff on something is better than not knowing anything at all. How do you subscribe to that school of thought that even if tariffs are on an absolute basis high, markets aren't reacting that much? In fact, you see equities really surging to record highs.
Well, I was talking to one of our technology analysts this morning, and I said, how are you thinking about these tariffs for earnings later this year? And he said, look, I don't know what to do. He just essentially said, I don't know which tariff I need to play with, so it's really hard for me to forecast. So he has to do scenario analysis. And he has to say, okay, under a 25% tariff, this company is going to be hit by this. Under 50% tariff, this company is going to be hit in a different way. So from the analyst perspective, they really don't know what we're going to see coming from President Trump. That's where the certainty question comes in. So even if you get a question where you're faced a 50% copper tariff, for example, those copper analysts at least know what they're playing with, and so they can trade accordingly.
Nathan, always a pleasure. Nathan Dean, our senior policy analyst with Bloomberg Intelligence, joining us from the nation's capital. Quick check of the markets, still lower after yesterday's record close. S&P 500 right now down just about 30 points. This is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers, minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. A down Friday. We are on track for a losing week. The Dow, the S&P, NASDAQ, all in the red right now. Tariff concerns front and center once again, with the S&P retreating by 22 points now. 62.58. Drop there of 0.4%. The Dow down 277, down 0.6%. NASDAQ down 35, a decline of 0.2%. The Mag 7 index on a down day for the rest of the market. It is advancing by 0.1%. 10-year 4.40%. The 2-year 3.89%. Gold is now surging $42 the ounce. That's an advance of 1.3%. 33.66 the ounce. West Texas Intermediate crude up 2.8%. 68.45 a barrel, and Bitcoin now up 3.8% at 117,000. We are looking at a record 858 on a Bitcoin. A group of Microsoft investors is pressuring the company to assess how effectively it identifies customers who misuse its artificial intelligence tools, a push that follows reports detailing the Israeli military's use of Microsoft software during its war in Gaza. Microsoft shares are up now by 0.1%. Recapping, stocks lower, down 0.4%. Your 10-year 4.40%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks very much. I'm John Tucker. You're listening to Bloomberg Intelligence, in for Paul Sweeney today, along with Isabel Lee, who wears so many hats here at Bloomberg, radio host, a print reporter. Can I ask you what it is that you're working on?
So I cover macro markets with a focus, I guess, on ETFs, which is exciting because everything now can be ETF-fied. Literally everything. Okay, so let me tell you. Last year, I think I wrote about a story on BlackRock launching an ETF that focuses on the top 20 stocks in the U.S. market and the top 30 stocks of the NASDAQ 100. So basically the NASDAQ 1 to 30. And then just the other day, they launched a BlackRock new X Top 100 X ETF. So it doesn't include
what
the 100.
What are the fees associated with that? Or is this like an all-out fee war when it comes to ETFs or not?
At least for BlackRock, I think it's around 20 basis points. So the ETF is a great lens into the market because you see that you don't really launch a product unless you hear a client demanding for it. So now the trend is people are trying to find ways to slice and dice the market. First, you want all the top ones, so ultra concentrated, and now you want to get rid of the big ones. So you want just the 101 to the 500th one. 500 plus, because there are more than 500 stocks in the S&P.
I told you she does it all. Isabel Lee. Focus on Munis, being brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. And that brings us to our favorite segment on this Friday. Eric Kazatsky, Senior Municipal Strategist with Bloomberg Intelligence, joining us now from our campus in Princeton, New Jersey, with the focus on munis. So Mr. Trump's big, beautiful bill has passed. What does it mean for munis?
Hey, John, how are you? So you didn't get the memo. I left. I'm very sad that I'm not there anymore, but I'm on the buy side now. But no, still excited to be here and joining you guys to talk about munis. So talking about Trump's bill, I mean, look, I think from our view and from the view of many strategists for the first part of this year, it was that it was really going to be a non-issue for the municipal market, and we pretty much remained unscathed. Now, that being said, there are a few areas that, were touched and are going to be touched by the tax bill going forward, and those are areas like healthcare with potential Medicaid cuts and higher ed, right? Higher endowment taxes for a lot of the Ivy Leagues, Harvard and Princeton among them.
Okay, correction here, because he got an upgrade apparently. Hopefully in pay. Eric's now the Managing Director and Client Portfolio Manager at McKay Municipal Managers.
people move. The world is small, but at least we're still talking to Eric. So, Eric.
He's still talking
That
to
is
us.
100% true.
Yes, you're still talking to us. What areas are the highest risk? Is it mainly hospitals, with the Medicaid cuts, or higher education with increased endowment taxes? Like, what should we be looking at?
Yeah, I mean, look, the endowment tax threat was almost going to be close to 21%, right? So coming in at 8%, I think it's a much better story for a lot of these universities, and they could sort of breathe a sigh of relief. That being said, definitely more risk on the healthcare side. These cuts to Medicaid definitely can impact single-site hospitals, rural hospitals, and things like that. Things that have sort of had thinner margins since the pandemic. So those are the credits that we want to be on the lookout for or avoid altogether.
You look at spreads in municipals between related securities. What, if any, where are you looking, and what, if anything, does that tell you at this point?
Yeah, I mean, look, spreads in every fixed income area are still pretty tight, right, on a relative basis. Our job is really to sort of find those pockets of, relative value that we think things have gotten abnormally wide. And, we just talked about higher education, right? So Harvard and Princeton, they typically are AAA credits that have traded very, very tight to AAA munis. And those spreads have gotten wide with a lot of headline risk, right? We still believe in the enterprise value of these, hundreds of year-old institutions, and it's a buying opportunity right now where spreads that, are 2 standard deviations or even more wider than they normally are.
Broadly speaking, we're heading into what you said is the most technically positive portion of the year. And when you look at a heat map, July is the only month over the prior decade which has yet to record a single monthly loss. Are you expecting the same for this month?
Yeah, I mean, look, obviously we can't predict, future performance based on past technicals, but, everything is sort of lining up right there.
Sound like a commercial, Eric.
It's a fair disclaimer.
I have to do a little bit of a disclaimer, right? If I had a crystal ball, I would say July is definitely heading in the positive direction, and we're liking where it's going. We have clarity on taxes, absent of the daily headline risk that comes with more tariff announcements. Things should be cooperative from a muni standpoint. There's a lot of cash coming back to investors, principal and income over the next 2 months, and it's being met with a steady stream of supply. So all things we want to see happening in our market right now.
All right, Eric, thanks so much. Good to see you. Eric Kozatsky, defector and managing director and client portfolio manager at McKay Municipal Managers with the latest on the muni market. Did you know they use remnants from the manufacture of denim in the U.S. currency?
No,
Yes.
Really?
Well, if you hold up a bill, you'll see like little shreds. It looks like,
Okay,
from your jeans.
Is that only in the U.S. or does that happen all over the world?
I don't know. I know that's definitely the case
That's
with
super cool.
U.S. Currency. And that brings us to a discussion about Levi Strauss with their earnings.
Fantastic.
Mary Ross Gilbert is senior equity analyst covering retail for Bloomberg. Did you know that?
I did not. I mean, I know what you're talking about, those little threads in the bills.
No, that's from the byproduct of manufacturing denim. They use it at the Treasury. Mary Ross Gilbert yesterday she was wearing what were you wearing yesterday?
Ralph Lauren.
Ralph Lauren, and today is that Brooks Brothers? No, Gap. Okay.
Very nice.
But it's a Malbon Gap collab, so sold out.
It looked like the little Brooks Brothers thing, but anyway. So. Levi, what did we learn from Levi Strauss in their earnings?
So I think what we learned in the earnings report, first of all, very optimistic view. But if you really dissect it, for example, the guidance that they raised on the revenue line, they now expect full year revenue to be up 1 to 2 versus down 1 to 2. Most of it looked like a shift in their view on the currency headwind. And then the other piece was because they had a strong second quarter. So the way we look at it is there's probably upside above their guidance and consensus view, which is in that range. So, we think that the way the business has been reset, look, Dockers is out of the picture now. They got rid of some underperforming lines. They really honed in their SKU count, their stock keeping unit count, and really honed on profitable merchandise, and they've really taken their tops business. They've infused more fashion and style, and it's a growing category for them, as is non-denim bottoms. And of course, their core denim business, jeans business, which they are at the leading edge of the latest trends. And, even slim and straight are still a thing, But the biggest growth is really coming from loose and baggy, and that actually translated with shorts too for summer, and that kind of explains why they also had a strong second quarter. And they saw it globally, so very very good, and across wholesale too. So that was nice to see that. But DTC, direct to consumer, really led, and that was up double digits.
Have you heard, John, skinny jeans are out and baggy is in? If you look at all the young folks like Gen Z, they do wear baggy pants.
I've got the stretch fabric.
Okay, good.
That's the point at which I find myself.
Okay, that's good. Levi's welcomes all styles. Okay, so more than half of Levi's merchandise needs for the rest of the year, according to the company, they've already been imported. But what will happen when that runs out? Have they released any plans when that happens? And with tariffs set in place by then, assuming?
Yeah, Isabel, so you brought up a key point, and that is, what is the impact of tariffs? So just to give you a little perspective, Levi's is very well diversified. They only source about 1% from China, so very little exposure there. Vietnam is probably 5 to 9%. Of course, we have news that that tariff rate Trump has set, but it's not carved in stone, and there's no effective date yet. And as we got news today that Vietnam is saying, hey, we don't want a 20% tariff, we want it to be 10 to 15. Nonetheless, with Vietnam being 5 to 9%, and then Mexico's 5%, and probably that is under their Canada agreement, so chances are they're not affected. And then everywhere else, they're assuming 10%. So the unmitigated impact is only about 50 basis points for the year, but with mitigation measures already taken effect, that's going to reduce it down to just 20 basis points. So they're one of the companies, if I look at my universe of apparel branded retailers, that are sort of the least impacted by tariffs. Unless things change, but we still think that the impact will still not be as significant as it might be for others.
I mean, is a company like this willing to take a hit to margins before raising prices for consumers? It's like 30 seconds.
Yeah, John, they're actually strategically raising prices on some of their new innovation. And that's where they're able to sort of build it in with that new product. And I think that's working effectively.
All right, Mary, always a pleasure. I can't wait to see what you're wearing next week. Mary Ross Gilbert, a senior equity analyst covering that sounded kind of creepy, sorry. Covering retail for us here at Bloomberg Intelligence. Let me get a quote for you. Levi Strauss, after the reporting their earnings after the close of regular trading yesterday, right now 11.5% higher, $21.98 a share. You're listening to Bloomberg Intelligence. I'm John Tucker, along with Isabel Lee. And as we look at markets right now, on this Friday, after the record close that we saw for the S&P 500 yesterday, right now 22 points lower. That's down about 0.4%, 62.58 on the index. The Dow down 292 points. And right now the tech-heavy NASDAQ 100 is 48 points lower. You are listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks slipping from records as President Trump intensifies his trade offensive, sending the dollar higher. Concerns about the potential inflationary impacts of tariff hikes weighing on treasuries. Right now, we have got the S&P 500 index moving lower, down 17, drop there of 0.3%. Dow Industrials down 282 now, a decline of 0.6%, while NASDAQ lower by 3 points. Little changed on the day, down less than 0.1%. The Bloomberg Mag 7 index on a down day for the rest of the market, now holding on to a gain of 0.4%. 10-year, 4.40%, with the 2-year currently yielding 3.89%. Gold surging $38 the ounce, up 1.1%. West Texas Intermediate crude oil up 2.7%, $68.37 a barrel. And Bitcoin now up by 3.5% at a record 117,533 on Bitcoin. So certainly tariffs, the major story this morning. Margie Patel is Senior Portfolio Manager at Allspring Global Investments.
We had some unfair treatment, and we need some tariff adjustment is right on the mark. There's been so much volatility in when the tariffs will take effect, what they are for different countries, how that will affect U.S. industries, and I don't pay too much attention to it. What I look at is just the fundamentals of U.S. companies, which look very good in spite of the tariff volatility.
Margie Patel of Allspring Global interviewed this morning on surveillance. Tesla aiming to bring its driverless taxis to California and Arizona. This according to the carmaker's plans for expansion. Tesla shares today, they're down 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. I'm Isabel Lee with the inimitable John Tucker. It's Fill-In Friday, as he says, and it's a Friday morning. You're welcome. You're listening to Bloomberg Markets, and we have a special guest today. She's the star reporter in the cross-asset team. Her name is Vildana Heinrich, and today she wrote the big take alongside Emily Grafeo. It's called Wall Street's ETF Upstarts Are Selling Liberty, Leverage, and Risk. And it's one of the most read stories on Bloomberg Terminal right now. If you go to READ, the story is amazing. It has great pictures, and we have Vildana now with us. So Vildana, what are these ETF startups? What are leverage ETFs, and what is next for that space?
So there's a really booming space in the universe of ETFs, which we know has more than 4,000 ETFs, but there's this particular pocket of funds that's really been growing just tremendously over the past 2 or 3 years, where we're seeing single security or single stock ETFs. So they're focused on one specific security or one specific stock, but they offer leverage or inverse exposure to some of them. And they've just been such a big hit with retail investors, with some institutional investors as well. But they're seeing billions flow in. And what we're seeing is a couple of upstart firms that are just seeing tremendous success here, where, you know, they said to us, it's really difficult for us to compete with BlackRock or Vanguard in certain areas of the ETF market. But here, they've seen a lot of success where they're just putting out these products that have been just a fantastic hit.
Is this really the product for mom and pop, the retail investor?
Well, that's debatable, right? Because one of the things that we discuss with all of these issuers is, do retail investors understand the risks? Because if you have a 2x, a double leveraged, NVIDIA fund or Tesla fund, those are some of the most popular single stock levered ETFs. Is there an understanding from the retail cohort about what potential losses might look like, right? And if we rewind back to Liberation Day, for example, like in April, when the market was selling off, some of these 2x ETFs were seeing minus 30, minus 40, minus 50%, because, the underlying stock was also selling off. And so that is one of the issues that is being debated in the space. But what the issuers tell us is, the prospectuses are out there. There's so much educational content out out there. All of them are doing podcasts. They're putting stuff up on their websites. They have daily, weekly, monthly newsletters. There's a lot of content out there for investors to be learning from, is the thought from the issuers, who really are making an effort in trying to put as much information out as possible.
And the last time mom and pop read a prospectus, I'm not going to even try to venture a guess, but anyway.
You interviewed 3 of them, Matthew Tuttle of Tuttle Capital, Sylvia Jablonski of Defiance, and Will Rand of Granite Shares. How are they thinking of these? Because a common thread that they have is they manage billions of dollars, but most of them work from home. You said in the story that Defiance is a team of 5 who work from home mostly. Matthew Tuttle works with his dog in his lap, with a lot of Discord and a lot of screens. How are they approaching their so-called newfound fame and also growing criticism towards their products?
I think maybe Tuttle Capital Management is a good example, because what he's doing is he's looking for so-called white spaces in the ETF universe, so areas where you don't have funds for specific things. And what he's doing is he's filing for them, and he's putting those ETFs out there and seeing whether or not they catch on with investors. So, for example, earlier this year, he filed and launched a levered ETF on Trump media, for example. So that's maybe something that he saw online. Is obviously it's seen huge spikes and huge drawdowns, but being able to offer a 2x fund on a stock like that, there definitely are people out there who want exposure to something like that. So he's looking for those areas where there might be interest from, in particular, retail investors, and seeing if those funds catch on. And some of them have been able to get billions of dollars very, very quickly.
How many ETF? This is like counting the number of podcasts out there.
Yes.
What are we up to? Like 10 billion ETFs?
Well, last year more than 70 launched, and that was more than the 2 prior years combined. But so far this year, we've already surpassed that, and obviously we're only halfway through the year.
The process by which, like a fund, like you would just the leverage funds, ETFs that you're talking about, what's the process? The regulatory, they have to get the stamp of approval from SEC or whoever, right?
Yeah, for ETFs, the process, it goes through the SEC. So they file, registration paperwork with the Securities and Exchange Commission, and it's you file for it, and then a certain amount of time later, you typically are allowed to launch it. The underlying are stocks that are already trading. So, for example, GameStop or Roblox, or name your popular underlying company.
Where do they say they get inspiration? Is it really social media, chatter, or friends?
Yeah, a lot of times it is social media. So to go back to the Tuttle Capital Management example, he is seeing a lot of really interesting stuff online. And so, he's getting ideas from there to file for and launch some of these products. So certainly there have been funds that he has put out that have started trading where the initial idea was sparked online, which is really interesting because, like I said, there's more than 4,000 ETFs. So issuers are sort of hard pressed to find areas where they can launch something that will make an impact, that will catch people's eye, that will have investors actually putting money towards the products.
Do we know who the best performer is so far of those that you mentioned?
Oh, there's so many of them. There's
no, but I mean, who's like,
Oh, of the issuers, you mean?
Yeah. Which
or the
ETF is the best
Probably
performer?
those tied to NVIDIA.
Some of the ones tied to there's 2x MicroStrategy ETFs. There's 2x NVIDIA ETFs, 2x Tesla ETFs. There's 2x. I mean, just any number of companies at this point. There's 2x a bunch of quantum company ETFs. There's the way that they're structured, actually, they reset on a daily basis. So they're not exactly always offering double the returns of the underlying company, just due to the way that they're structured. So a lot of times what you'll see is MicroStrategy itself actually being up much more than the 2x MicroStrategy ETF.
Which defeats the point.
Yeah.
Well, it's just a quirk of the way that they're designed. But then other times they really are up much more. So just depends on the time frame that you're looking at. But there is that inherent sort of the way that they're built. They are resetting on a daily basis.
Built down, yeah. High rate. The world of ETFs, our Bloomberg News cross-asset reporter on today's Big Take. Wall Street's ETF upstarts selling liberty, leverage, and risk. You're listening to Bloomberg Intelligence.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
And of course, it's Phil and Friday here on Bloomberg Intelligence. I'm John Tucker, along with Isabel Lee. Paul, I guess he's at the beach on Friday. Where else would he be? Interesting story we got from Brooke Sutherland today, one of our Bloomberg columnists, the Boston bureau chief and author of the Industrial Strength newsletter. Of course, we're going to get earnings. They start in earnest next week with the banks. We're also going to hear from manufacturing companies in the upcoming earnings season as the industrial economy in the U.S. continues to show signs of pressure. But Brooke, you're right. There's going to be some surprising stability, the same that we saw last period. Why is that?
I think a couple of different reasons are behind that. One, I think that, you know, the bigger companies that we tend to write about from an earnings perspective are in a better position to weather the current moment of volatility, whether that was bringing in inventory to get ahead of tariffs, or, you know, being able to pass on the increased cost of tariffs to their customers. Bigger companies have a lot more flexibility when it comes to navigating a situation like that, whereas the smaller companies, which are also taken into consideration for a lot of the underlying data points that we look at for the industrial economy, they have a harder time. They're feeling more of a pinch from this strain. But I also think, you know, there's a concern among some analysts and people who watch the industrial sector that, maybe investors are getting a little bit complacent about the risks that are out there because it's not totally realistic to think that all of the ramifications from tariffs would manifest right away. More likely, the concern is that it's sort of a building effect as people hold off on making purchases, particularly as it relates to capital expenditures, and that then has a trickle-down effect as we get further on through the year.
Industrial distributors are planning on flat sales growth in 2025. That's according to Wolf Research, and you wrote that in your note. And we have next week Fastenal, GE, Snap-on, 3M. Is there any company you're looking at in particular, whether for the upside or the downside?
I think that all of them are going to be really interesting for different reasons. The interesting thing about the industrial economy is that all of these companies are interconnected. And so Fastenal is coming up on Monday. I think that's always a really great company to watch just because the big industrial companies, the big manufacturers are Fastenal customers. And so it can be a really good early read in terms of what we could expect later on in the earnings season.
Just to be clear, the big manufacturing companies that you're talking about, they are or are not manufacturing here in the United States, or is it a mix?
It's really a mix. Most of the bigger U.S. manufacturing companies will tell you that they're local for local, and what they mean by that is that they primarily make what they sell in North America. Now, of course, that does include Mexico, and then they make what they sell in Europe, primarily in Europe, make what they sell in Asia, primarily in Asia, and so on and so on. Again, I think that is concentrated at the bigger levels for industrial manufacturers, and you do not see that kind of localization for the medium or smaller manufacturers, would tend to be more reliant on Chinese supply chains.
You mentioned and we see that the S&P Industrials Index hit a record high on Thursday. What is driving that optimism, and do we expect it to grind higher in the second half of the year?
It would be, it would be surprising to see it crank a lot higher. There's already, a decent amount of high expectations baked into these stocks being at a record. Certainly, you see investors really banking on that idea of a second half recovery in manufacturing. And remember that the manufacturing sector has been in a slump for a while now. This is not new. It really, there was a lot of optimism that manufacturers might sort of bounce back this year before we had all of the tariff headwinds and the uncertainty introduced by that. So this has been a long time coming for industrials, that we might see activity start to perk back up again. The question is, how robust is that recovery going to be? And I think it's going to be difficult to see a really meaningful recovery in industrials without a bounce back in the consumer side of things, where we are still seeing pretty consistent reports of strain, particularly when it comes to lower income consumers. These things tend to move somewhat in tandem, and it's very unusual to have a strong industrial economy when the consumer side of things is weak.
One of the intended effects, I suppose, of the tariffs is to lead to something of a CapEx renaissance in the United States. Any signs of that, or what these companies that you mentioned are saying about that?
Not yet. I think on the flip side, I think all of the back and forth and the constant shifting of policy around tariffs makes it very difficult for companies to decide what they want to do as far as CapEx, and if they do need a new factory, where that factory in fact should be, and what that cost differential calculus will end up looking like by the time that factory is ready. Remember, these don't just go up overnight. They take, can take years just to plan. They take years to build, and so these companies are trying to make long-term decisions and trying to figure out what exactly the world will look like when that factory is ready to open. And so I think it's very difficult. And when you talk to industrial CEOs, what they'll tell you is that they can figure things out, that they're used to adapting to challenges. They've gone through the pandemic, that, some of them were still around during the financial crisis. They can figure it out, but they have to know what the rules of the game are. They have to know what the lay of the land is in order.
Brooke Southern, I think we just lost you there. Anyway, Brooke Southern, Boston Bureau Chief, the author of the Industrial Strength newsletter, joining us via Zoom from Boston. Thanks, Brooke. Appreciate that. And as we wrap up today's Bloomberg Intelligence Show, I'm John Tucker along with Isabel Lee. Quick update on the markets. The S&P 500, 22 points lower. That is down 0.4%. The Dow Jones Industrial Average is down 340 points. That's a decline about 0.75%. The NASDAQ 100 is down 39 points. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM, channel 121. Access the world's only global audio business network coast to coast, 24 hours a day. Stay with us, your top stories. The global business headlines coming up right now. You're listening to Bloomberg Radio. For Isabel Lee, I'm John Tucker. Well, thanks for listening.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. President Trump will get a look at the epic flood damage in central Texas soon.
That much water that fast, without a dam break, you'd think a dam would have to break to have it.
CBS's Jason Allen along the Guadalupe River.
He is going to talk with some of those first responders, some of those folks who were involved in those searches in the hours after the storm, as well as these days that have gone on looking for the victims, as well as talk to some of the local officials.
Some parting words from the president were on one of his new tariff moves.
Speaking to reporters before heading to Texas, the president said former Brazilian President Bolsonaro should not be on trial for trying to overturn his election loss.
They're treating President Bolsonaro very unfairly.
The president considers Bolsonaro a personal friend.
He was a very honest man.
Imposing 50% tariffs against Brazil seems contrary to the president's stated policy of correcting trade imbalances, since the U.S. has a trade surplus with Brazil of more than $7 billion. Linda Kenyon, CBS News, the White House.
A federal appeals court has thrown out an agreement that would have allowed accused 9/11 mastermind Khalid Sheikh Mohammed to plead guilty in a deal that would have spared him the risk of the death penalty. Correspondent Scott McFarland has more on a CBS News investigation into Thomas Crooks, the man who shot at President Trump a year ago in Pennsylvania.
In the months before the incident, he was seemingly leading two lives. Big plans for his future, according to his former professor, Patricia Thompson.
I thought he was a star student. He had his head on straight.
CBS News uncovered emails showing last year Crooks was applying to transfer to a 4-year engineering program, while at the same time, Crooks ordered a chemical compound called nitromethane, which is flammable and explosive. He perused websites about firearms, tactical gear, ammunition, and then on December 6, 2023, internet logs show Crooks scanning a web page about Trump, and 1 minute later, reading about AR-15s.
Crooks was shot and killed at that scene in Butler, Pennsylvania. On the Health Watch today, some new information from Sabrina Cupid at our affiliate WSB.
According to the Atlanta-based CDC, an estimated 1 in 3 teens and preteens ages 12 to 17 have prediabetes. That translates into an estimated 8.4 million young people. It's a condition characterized by higher than normal blood sugar levels that increases a person's risk of developing type 2 diabetes. The nation's top health agency calling this a critical warning sign for the health of America's youth.
Defending champ Carlos Alcaraz beat American Taylor Fritz to advance to the men's final at Wimbledon. And checking Wall Street, right now the Dow Jones Industrial Average down 333 points. The S&P is down 21. This is CBS News. A Paris landmark is up and running again.
Oh, yeah. Yes, we can. The famous dancers of the Moulin Rouge, the Red Mill, performing outside the iconic venue as its sails turned for the first time since a bad storm 14 months ago. Spoiler alert, not all the dancers are French. Jasmine's from Australia.
Everyone just couldn't wait to come out and see the windmills spin again.
Management said the repairs were a high priority because Paris, without the turning sails of the Moulin Rouge, just wouldn't be Paris. Vicki Barker, CBS News, London.
Health Secretary Kennedy has canceled a meeting this week of a federal task force that helps determine which preventive health measures will be covered fully by insurance companies. The 16-member panel of doctors and other health experts plays a key role in determining whether millions are eligible for cancer screenings, stroke medication, and other drugs and preventive services. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump heads to Texas with more questions about last weekend's deadly flooding. Welcome to the Friday edition of Balance of Power here on Bloomberg Radio. With the President and First Lady set to arrive this hour in Kerrville to meet with first responders in the throes of a massive recovery effort. We're going to get the latest ahead from Bloomberg's Tyler Kendall at the White House and from Bloomberg's Texas Bureau Chief Julie Fine, who's tracking this for us in Dallas. Republicans pushing rescissions on Capitol Hill, budget clawbacks, even as budget writers start work on the next fiscal year. We're going to tell you what to watch ahead with Nathan Dean, our policy analyst at Bloomberg Intelligence, with analysis from our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. And we start, as always, on Wall Street. Charlie Pellet at World Headquarters in New York now with his look at the markets. What's going wrong here, Charlie?
Right now, we have got the Dow, the S&P, NASDAQ all declining. In a word, tariffs. Concern about tariffs. Stocks slipping from records. President Trump intensifying his trade offensive, sending the dollar higher. Concerns about the potential inflationary impacts of tariff hikes, certainly weighing on the Treasury market. We begin with equities, with the S&P down 26 right now, 62.54, drop there of 0.4%. We've got the Dow down 365, a decline of 0.8%, while NASDAQ lower by 27, a drop there of 0.1%. Your 10-year 4.41%, the 2-year 3.89%. Spot gold up $32 the ounce, up 1%, 33.56. West Texas Intermediate crude oil up 2.8%, 68.43 a barrel. And Bitcoin, what a story there. Another record up 2.8%, 116,724 on Bitcoin. Bottom line here, stocks lower, tariffs front and center today, rattling investors. John Stoltzfus is Chief Investment Officer at Oppenheimer. He was a guest this morning on Bloomberg Surveillance.
Right now, we're waiting to see what happens with the tariffs. Today, the nervousness in the market that's being expressed. It's the tariffs are the main focus here. Now that we've gotten over the budget, we've seen what the Fed is saying that it's going to do effectively. When you look, probably about 2 cuts this year.
John Stoltzfus of Oppenheimer, and you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. A group of Microsoft investors is pressuring the company to assess how effectively it identifies customers who misuse its artificial intelligence tools. A push that follows reports detailing the Israeli military's use of Microsoft software during its war in Gaza. Microsoft today up 0.5%. Recapping, stocks slipping from records, S&P down 0.4%. Balance of Power continues now. Back we go to Washington. Once again, your host with the Friday edition. Here he is, Joe Matthew.
All right, couldn't do it without Charlie Pellet in New York. Charlie, thank you so much. We'll get back to World Headquarters for the latest on the markets. A short time from now, keep tabs on the Friday trade. As you can see, there's a bit of a tantrum going on here once again about tariffs. But tariffs will not be leading the conversation today as we cover the President of the United States on his visit to Texas. It's going to bring us right back to the painful stories that we started this week with following the deadly flooding in Kerrville. Remembering we have at least 120 deaths here and so many more missing. A week later almost, more than 170 people are missing. And so the president is making good on his plans to travel there. He'll be touching down, if things are on schedule, a little bit more than 10 minutes from now. And of course, we'll keep tabs on his arrival and any comments that the president makes. He's going to be in Kerrville for about 3 hours today. First, he'll have the arrival. He'll do a bit of a tour and then a roundtable with first responders. There's been a lot of talk about enhancements that could be made and could be part of the special session, the legislative session that's coming up here, if that in fact takes place in Texas. Governor Greg Abbott asking for warning systems, flood alarms, and so forth that the president has now indicated that he would support. So let's start our coverage. Before we bring you to Texas, we want to go to the White House. Bloomberg's Tyler Kendall has been tracking the president from the planning of this trip at the beginning of the week to his imminent arrival. Now, Tyler, what can you tell us?
Yeah, hey, Joe. So we are expecting President Trump and First Lady Melania Trump to touch down shortly. Later this hour, they will participate in a roundtable with first responders and local officials as they survey the damage from these absolutely devastating floods. The latest numbers show us that at least 120 people have died and 170 people are still believed to be missing. This trip is really going to be focused on the White House showing solidarity with the Texas state and local officials and government as they respond to this and really emphasize that collaboration between the White House and local officials. We are expecting, for example, the Homeland Security Secretary to be there alongside the governor, as well as the two senators from Texas, Republican senators Ted Cruz and John Cornyn, to be there as well to really try to emphasize that they are working closely together amid what had been questions about the future of the Federal Emergency Management Agency, as the administration had previously suggested that they could be downsizing it in a bid to streamline bureaucracy, cut back and save some funding, but also to really give control back over to the states. That has often been an argument that we've heard from the administration, that disaster relief and immediate response should be at the local level. Of course, we had heard earlier this week from the White House Press Secretary Caroline Leavitt. She was asked if the administration would continue any efforts to downsize FEMA. She didn't answer the question directly, but she did say that the White House ensures that Americans who need assistance will get it, whether it be federal or state assistance. We should say that FEMA has been really a chronically underfunded agency due to a lot of different reasons, including playing catch up when it comes to responding to disaster aid requests. They respond, but then they also need to get that funding, and it's sort of often dictated by a congressional funding cycle, which could complicate things further. Joe, as you well know, this is an issue that has plagued both Republican and Democratic administrations.
Well, it's a really interesting point that you're making here, and it's part of the conversation that's being driven by what took place in Texas. Tyler, the president is clearly changing his view on FEMA, though there is reporting that the administration, instead of winding down the agency, might attempt a rebranding that would emphasize state leaders' roles in disaster response. The Washington Post reporting that. Are we hearing any language, a changing language out of the White House that will coincide with this trip today beyond what we heard from the press secretary?
So right now we are still awaiting more official confirmation and details on this specific angle here. But of course, it would align with what we have previously heard from this administration on really a range of federal agencies, and this idea of downsizing and trying to give back the power to state and local governments is something that we'll be watching closely. And as President Trump touches down, perhaps we'll get some more details there.
Tyler, it's always great to have you. Starting us off here on the Friday edition, live from the North Lawn of the White House, Bloomberg Washington correspondent Tyler Kendall. As we turn our attention now to Texas, just moments away from Air Force One touching down. Julie Fine, of course, our Texas bureau chief, is with us right now from her perch in Dallas. Julie, it's great to have you as we try to cover both ends of this story. What is waiting for the president and the first lady when they arrive?
Well, there's, of course, local officials and state officials that will be there greeting them. But once they go, they will have a briefing. After that, they are going to tour this destruction. I think you can see the video, but seeing it firsthand is a completely different matter there. So they're going to walk into an area there's still a lot of debris on the ground. There are still devastated people in the area, and now they're trying to figure out what's next for a part of Texas that is so important to the culture of the state.
Well, the numbers that Tyler was just relaying to us are horrifying, and to think that 170 are still missing, Julie. I'd love to hear from you on what Governor Greg Abbott has been talking about as he's asking lawmakers to consider some new proposals in an upcoming special session. Early warning systems, other preparedness infrastructure like flood alarms that could go into flood-prone areas like this. Is that the next phase of this story?
That is the next phase, Joe. A week from Monday, the Texas legislature will gather for a special session. There are already groups studying that issue. The question here really is going to be who is going to pay for it. Lieutenant Governor Dan Patrick already said the money will be there. When you talk about the local government in Kerr County, they said they discussed it at one point, but the taxpayers did not want to foot the bill for it. So now they're really going to have to take a look at, states can mandate some things, but oftentimes it's up to the local governments to pay for it. So they will have to look at spending. It's going to be a lot of money. If you're going to put those emergency systems on rivers in Texas, it's going to cost a lot of money. I expect there will be a lot of pressure on lawmakers because Texas does have a surplus. They may say it may be time to dip into that. Question will be where the money comes from, not whether or not they will be built at this point.
Yeah, got you. Julie, while you work on that microphone there, I just want to relay what the president told NBC's Meet the Press about this. Apparently, Kristen Welker, the moderator of Meet the Press, got him on the phone again. You just call the cell phone when you want to make news. Quote, after having seen this horrible event, he said, I would imagine you'd put alarms up in some form, where alarms would go up if they see any large amounts of water or whatever it is. But the local officials were hit by this, he said, just like everybody else. There is a concerted effort to try not to project any sort of narrative that local officials did anything wrong. The idea here is to give them more tools to prevent something like this in the future, and whether flood alarms become part of that, I guess we'll see it. Julie Fine back with us now from Texas. Julie, the president's going to be there for about 3 hours. Is there any concern that this will get in the way of recovery efforts?
There hasn't been any outward concern. I mean, he waited several days to get here. There hasn't been really discussion of it. And Joe, you touched on an interesting point about blame with the local officials. I think the state government, all the governments have been very careful to not do that. I mean, obviously, there's an enormous amount of pressure on the local governments here and a lot of questions that do have to be answered. But you touched on a very important point there. There hasn't been any outward discussion of the president. He's not going to be there for a long time. Obviously, he can't fly directly into that area. He will have a briefing, then he will briefly tour the area. There have been a lot of state officials that have toured the area. There was a media tour of the area as well. No complaints that it took away from this effort, which, Joe, as you know, is going to go on for a very long time.
Julie Fine in Texas. We thank you, Julie, as the president makes his way back to Kerrville today. As I mentioned, we'll let you know when the president arrives, and we'll be bringing you his remarks along with the First Lady if they do choose to speak. Sometimes these are a bit spontaneous as the president is toured around the area, as Julie mentioned. There is a roundtable, though, as we heard from Tyler, with first responders. That'll be after 2 p.m. Eastern time, and you'll likely hear the president's remarks during Bloomberg Business Week Daily. We're going to keep things here in Washington straight ahead. You know who we haven't heard from in a long time? He's back with us, Nathan Dean, the chief U.S. policy analyst at Bloomberg Intelligence, watching rescissions, the implementation of the big, beautiful bill, and a lot more. Companies are calling as they get ready for the next tax filing season. And of course, Nathan is always on the other end of the line. He's going to be with us straight ahead. Later, our political panel, Rick Davis and Jeannie Shanzano, with us on the Friday edition of Balance of Power right here on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red, wrapping up the final trading session of the week. We are on track for a losing week. Right to the numbers here where we stand. Here's where we stand with tariffs front and center on investors' minds. S&P right now down 21, drop there of 0.3%. The Dow down 336, down 0.7%. And NASDAQ is down 14, a decline of 0.1%. Stocks fell from records as President Trump intensified his trade offensive. The 10-year, 4.41%, with the 2-year currently yielding 3.89%. Gold up $31 the ounce. Spot gold up 0.9%. West Texas Intermediate crude oil up 2.6%, $68.25 a barrel on WTI. And Bitcoin now up by 3.1%, trading at a record 117,067 on Bitcoin. Tesla is aiming to bring its driverless taxis to California and Arizona. According to the car maker's plans for expansion, CEO Elon Musk predicting on his social media service X that Tesla robo-taxis could launch in the Bay Area, San Francisco Bay Area, probably in a month or two, pending regulatory approvals. Tesla shares, they're down little change right now, down less than 0.1%. So recapping here, equities are trading lower. All about the latest tariff developments. S&P down 20, a drop there of 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie, have you heard about the tomato tariffs? Did you read about this on the terminal?
I did not read about the tomato tariffs. Tell me all about it, Joe Matthew.
This is going to land right in the middle of your newscast, a big rotten tomato. Starting Monday, by the way, thank you, Charlie Pellet, as always. Starting Monday, all tomatoes imported from Mexico will be subject to a 17% tariff. 17%. Nature Sweet, the big tomato company, nation's largest importer, they say, says if that happens, and it's apparently going to happen on Monday, they'll have to hike consumer prices by as much as 10% after this kicks in, suggesting that they're swallowing some of that tariff, and maybe more will have to be handed on in the end. More than 90% of U.S. tomato imports come from Mexico. So start stockpiling the salsa. You might not want to do the tomato salad at the picnic later this summer. As the administration questions whether tariffs are inflationary, we might have our next case study here. This is the kind of thing I miss talking to Nathan Dean about. He's been gone for weeks. Bloomberg Intelligence Senior U.S. Policy Analyst, back in the USA. Great to see you. Welcome back. We have to unpack a lot of stuff, but I want to start here with tariffs because that's been the big story this week with the letters going out. Now 50% copper, 35% on Canada just happened to drop out of the sky overnight. And yeah, that's the truth. This is the no caprese summer, apparently. What do you think about this? We're going to let this go into effect. When a company says we're going to hike prices, how can the administration say they're not inflationary?
Well, obviously, the administration can use the bully pulpit to try and get some of these companies to not increase their prices. We've seen that with some of the other things, other tariffs that have gone on. But really, there's two stories that we're telling our clients here when it comes to the tariffs. First is it's a summer of status quo. First, it was Liberation Day. Then it was July 9th. Now it's August 1st. And more likely than not, there'll be an extension beyond August 1st. And so, yes, you're getting these incremental tariffs. But there are a lot of headline risks with these tariffs because, even the Canadian tariff, the 35% tariff, USMCA is not part of that. And that represents a bulk of the trade between the United States and Canada. And so we'll say is that as we get to August 1st or we get closer, look for the negotiations, stay close to Bloomberg News, because if these negotiations go well, you're not going to hear much about it. If they don't go well, President Trump is going to come out there with another, inflammatory statement that will get the markets all worked up. Yeah. And when it comes to tomatoes, the other thing that we're telling our clients is that our general thesis on a lot of this is that the tariff thoughts that are coming out of the White House are designed to not really impact people when it comes to grocery stores or electronic goods or anything like that. And so tomatoes especially, well, it's summer. There's a lot of local tomatoes out there. But as we get into the autumn, into the fall, any parent knows that if you're going to buy these strawberries, they're much more expensive in the winter.
All right, so this is important. So go to the farmer's stand for now. I thought you were going to say you were telling clients to start canning tomatoes, but I guess the idea is this will be resolved before it becomes a problem. That's been the pattern.
I wouldn't say resolved, but at least walked back. Okay. I mean, maybe walked back is a little bit stronger of a word.
You can't have a taco without tomatoes.
Exactly, but you would have a 17% tariff right now. Negotiations could take place, and President Trump could get something out of it. You know, this is the biggest question. It's very difficult for analysts to try and figure out where we're going with this. But the playbook since Liberation Day has always been an inflammatory statement, gets the market all riled up, and then all of a sudden there's a negotiation, there's a talking, there's maybe exemptions or anything like that. Yep. And the true end game, the true fears of the market have never taken place, hence the taco. Now, Treasury Secretary Scott Bessent was telling investors just this week, I wouldn't call it taco. He had something else that I wouldn't say on the air. But, you know, again, the idea here is that as we're going to get closer to August 1st, headlines will start to increase risks. The markets will get concerned, but we ultimately think there's another kick of the can.
Well, we're at all-time highs basically right now in the stock market. I know we're a notch lower today, but this does not seem to be a Wall Street that is taking any of this seriously.
No, and I would also say is that when it comes to the letters that came out this week, there were a lot of exemptions. I mean, just the Canada one is for a perfect example because USMCA wasn't part of that. Right. You know, there are also going to be other exemptions out there, whether it's Japan or South Korea, and it's just this idea that President Trump is not going to go far enough that truly shoots, you know, that harms American consumers in the way that you're going to see pricing changes behaviors at the in the marketplace.
Let's hear from Russ Vogt. Can we do that, CC? He was on the other network this morning talking about rescissions. And this is interesting here. There's this effort underway. You saw it coming. Not a lot of money. It's about $9 billion in the grand scheme. It's a drop in the bucket. But this is money that was already approved by Congress, and Republicans also voted to approve. So Democrats are saying, hey, wait a minute. How do you think this works? We're not going to trust you in the future if you guys pass this. By the way, it's USAID funding. It's NPR PBS by way of the Corporation for Public Broadcasting. That's where the money's coming from, $9.4 billion. Here's what Russ Vogt said today at the White House.
We have our first rescissions package up on Congress. We had a great vote in the House. We have a second vote next week. I am confident that they will pass the bill. We think it's a very important step for Congress to show that they are willing to pass the DOGE cuts. You know, people say, why is it a $9 billion package? It's a $9 billion package because we want to see is Congress serious about that. Senator Kennedy has had some incredible floor speeches on this very issue. Is Congress serious about passing and making the DOGE cuts permanent, or are we going to have to continue to use our executive tools on that?
Good question. A lot of people don't think Republicans will pass this rescissions plan. What do you think?
So
you got odds on this?
We don't, because there's really not much of an investable angle when it comes to this package in particular. But what I'd say is it wouldn't surprise me if it does pass, because I go back to the idea that all politics is local, and this rescissions package doesn't really have the provisions in there or the items in there that somebody can say, go back to their constituencies and say Kentucky or Maine or wherever, and say that this package, I'm going to, you know, this package ultimately is going to harm my constituents. I don't see that with this one. But future, you know, rescissions packages, that's what I would always ask myself is, what is the White House trying to actually rescind here? You know, there was talk about rescinding a safety commission that had to do with Appalachia. You know, several of the Republicans that came from West Virginia came out and said, no way, I've actually been fighting for this. And they were tweeting even just this morning saying, look, I'm going to protect this because this is something that impacts my constituents. So I would just say is that if you're looking at these rescission packages, look for the investable angle, and there certainly would be some there in the future if you're talking about energy sector and so forth like that. I think that's going to be in the next one. But also it's just say all politics is local, and what are they going to do? Because it's much easier to say I'm going to vote something on a national level that's not going to impact my constituencies than it would be to impact the district when I go back home.
Interesting. That's why we hear from Mike Rounds, for instance, about local radio stations, these local NPR stations that could be defunded here. They actually provide a lifeline to communities that don't have a commercial options, you know, in rural areas where there's no market for that. And for a guy like me who comes from small market radio, that's the local dream factory. That's where you get the news. That's where you get the entertainment. And this might survive as a result, it sounds like, despite the aversion to NPR that Republicans have.
Yeah, I mean, I would just say is that when it comes to this package in particular, I think in the Senate, obviously, there's probably, I'd say, about 15 Republican senators that really do not like the idea of going back and rescinding funding that they've already approved. But they also like the idea of retaining control of that process. Because the last thing they want to have happen is for the Doge committee or the White House to come in and just say, look, we're going to impound the money, we're not going to spend it. And then next thing you know, you go to the courts, and regardless of what happens, it's taken out of the congressional hands and it's put into the executive branch and the judicial branch. So I could see some of the Republican senators saying, look, let's not fight this battle now. Let's fight this battle in the future when there's something that's even more important to our districts. But again, we'll see next week.
So we started talking here with tomatoes on our mind. We stay here in the greenhouse with the latest on cannabis. This is hysterical. We've talked about this a lot. The massive moves that we see in these stocks based on almost nothing. There was an effort to reschedule cannabis under the Biden administration. It's been bogged down. You see a headline like this. This was, 3 days ago, if I remember correctly. The president's pick to run the DEA said that he intends to examine a proposal to federally reschedule marijuana, and we have the biggest rally in pot stocks that we've seen in months. Is this even real?
Well, I would say these marijuana equities have been really, and we've said in the show before, they have hot sauce.
That's right.
There's lots of volatility. Anything happens in Washington.
Curleaf went up 25%.
Exactly. And so the marijuana stocks, though, have had really difficult times of late. And so a lot of these retail investors who are hoping for reschedulization, they're obviously buying into it, and they're really hopeful here. Yeah. Where I'm coming in as negative Nancy is said, look, I've been burnt too many times saying that this is going to happen, and I haven't really seen much in the way that reschedulization is going to happen. Just on July 8th, the DEA reported into a court case and said, look, there's really not much that's happening on this administrative process. Right. There's been nothing happening in 6 months. And when Terrence Cole hasn't even been confirmed yet, even though he says he plans to examine it,
he's not a fan of it.
His history suggests that he's not a fan of it.
Right.
And so the idea here is, I think a lot of these retail investors who are really looking into this are hoping that President Trump or the MAGA crowd comes in and says, look, we're okay rescheduling. And I don't want to say it's not going to happen, but I would just say, let's pause, let's wait a minute, because marijuana is not the most important issue. And especially as we're getting into August recess, this most likely is going to get pushed to the end of this year.
It sounds like this is also not an administration that seems to be in favor of legalization on any real level. I know the president danced around that in the campaign, but you've got states like Virginia still with a Republican governor moving forward with full-on retail, adult use, whatever you call it, marijuana sales. Despite that, will those states run into trouble here in our remaining moment?
I don't think so. I mean, obviously, this is where the marijuana investors come back at me and they say, look, it's going to happen never. And I don't disagree. I do think marijuana legalization is going to happen. I just think it's going to be a couple years from now because the states are going to continue to push it, not so much at the federal level.
In the meantime, you're trading volatility is the story.
Exactly.
Right? This is the only way you're making money there. We missed you. Everybody missed you around here. Welcome back. Nathan Dean, Bloomberg Intelligence, the senior U.S. policy analyst, taking calls from clients like you, but only here on Balance of Power. Great conversation. Great to have Nathan back on the Friday edition. We're going to assemble our panel next with plenty to talk about here as we careen into the weekend. Rick Davis and Jeannie Shen Zeno on their way in. We'll be tracking President Trump and the First Lady on their visit to Texas as well. We'll have much more straight ahead. Smoke 'em if you got 'em. I'm Joe Matthew in Washington. This is Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all in the red right now, retreating from records as President Trump intensifies his trade offensive. Keep it locked into Bloomberg Radio for the latest on any and all trade developments, specifically right here on Balance of Power. Here's where we stand in terms of the equity market. The S&P down 18, 62.61 right now. That represents a drop of 0.3%. Dow Industrials down 330, lower by 0.7%. NASDAQ lower by 5, a decline of less than 0.1%. On a down day for the rest of the market, the Bloomberg Mag 7 Index pushing higher, up 0.5%. Tesla shares now up by 0.1%, but NVIDIA keeps on going, up another 1.5%. Your 10-year, 4.41%, with the 2-year, 3.89%. Gold up $30 the ounce, up 0.9%. West Texas Intermediate crude up 2.8%. WTI 68.43 a barrel. Bitcoin, a major story today, surging to another record at 117,429 on Bitcoin, up right now by 3.4%. As for the overall market backdrop, Emily Rowland is co-chief investment strategist at Manulife John Hancock, and she told us right now it is on to earnings.
There's a lot to take in, from the big, beautiful bill to tariff announcements. You can almost get stuck in analysis paralysis doing that. And luckily, we can focus on the fundamentals. It reminds us of that famous Bill Belichick press conference where he refused to answer questions about the loss to the Kansas City Chiefs and kept saying, we're on to Cincinnati, we're on to Cincinnati, and we're on to earnings season next week.
Indeed, the earnings train will go express, with reports coming up from J.P. Morgan Chase, Citigroup, and Wells Fargo, all of that on Tuesday. After earnings, Levi shares surging now by 10.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host is Joe Matthew.
All right, Charlie, I guess we're sliding into the weekend here on Wall Street, but that does mean it's Friday, and I do welcome you to the Friday edition. Thanks for meeting us here at the threshold of the weekend. On Balance of Power on Bloomberg Radio, Satellite Radio, Channel 121. On Bloomberg Originals, we're on YouTube right now, too. Search Bloomberg Business News Live. You're going to want to come in for this one. I have a couple things I want to show you. If you're with us on the radio, we'll take care of you as well. Are you going to see the new Superman movie this weekend? Everybody is all excited about Superman, right? The dog, Crypto. The latest take on this iconic brand. Yeah, DC Comics, but a different wrinkle now. James Gunn, the Marvel guy, is making it. It's supposed to be a more up-to-date, inspiring, optimistic take on the old tale. Guys like me who grew up with Christopher Reeves are supposed to love this stuff. As you can see on YouTube, the White House, well, I guess has its own version of Superman. Donald Trump in the full outfit, as you can see, taking off into the heavens. I'm going to sort of walk you back here a little bit, because James Gunn's been doing a lot of press, as I read in what is the best story on the terminal today by the great Jason Bailey. The headline, Superman immigrant backlash is comically misguided. James Gunn said a couple of things in some of the media interviews he's been doing. Superman, he said, is the story of America. He told the London Times, quote, an immigrant that came from other places and populated the country, unquote. Populated the country. This has created this big woke backlash against the Superman movie because, well, nothing is simple anymore. Big expose on Fox News. It's set social media on fire from the far-right rage machine, in Jason's words. Hence the post on social media today from the White House. We see that again. President Trump as Superman. Look at him taking off. He doesn't like dogs, though, so I guess there's no crypto. Of course, Donald Trump has a history of this. He's been dressing up as a lot of different things in social media. Remember when he showed up as Rocky just a couple of years ago? Well, that was 2019. Looks pretty good with the belt, I have to admit. But as Jason Bailey writes, the idea that Superman is a previously apolitical character who has been co-opted by the political left for cultural indoctrination is comically ignorant. You know, the guys who started this, Jerry Siegel, Joe Shuster, both children of Jewish immigrants. And before we even entered World War II, they had a 2-page story of Look magazine called How Superman Would End the War, in which he literally takes Adolf Hitler by the throat. There was later a radio show, Adventures of Superman. The 16-episode arc called Clan of the Fiery Cross, in which Superman took on the KKK. So Jason makes the point that there's not a lot new here, and I'm really glad that he's with us. Bloomberg Opinion guest columnist. He's a film critic and historian and author of the book Gandolfini, Jim Toney and the Life of a Legend. Jason, I can tell I like you already, and I appreciate your coming to talk to me here on Bloomberg. Are you surprised to see the woke backlash? This is speaking for not really Superman, but the political climate we're in here, right?
Right. I mean, you kind of put your finger on it earlier. Nothing is simple anymore. Nothing is what it appears, what its intentions may or may not be. Everything is up for sort of a deep read that's usually comprised of a kind of bad faith. I knew earlier this year, I actually wrote a different Bloomberg editorial about this, that when the Snow White remake tanked, and suddenly people were eagerly ascribing it to making it an Israel and Palestine issue, I was like, oh, we've really sort of crossed the Rubicon here. So I'm unsurprised. I'm especially not surprised. These debates run rampant throughout popular culture, but especially in the sort of superhero movie world, which speaks first, to their cultural ubiquity. Like, these really are typically the biggest blockbusters, the movies that everyone sees and thus has an opinion on. But they are also typically loaded for these kinds of readings for a lot of the reasons that we're seeing with the Superman controversy.
So you're a film critic. You understand the business of Hollywood, and you don't seem in your column to feel that this is going to hurt box office receipts for this movie. So are people just talking out of their hats and then going to see the movie? How does that come together?
I mean, I think it's very easy to sort of overestimate the effect that a small number of extremely loud voices can have. And the way that I put it in the column was that, these takes, the likes of which we're seeing on, Fox News and Daily Wire and places like that, they generate clicks. They generate the enthusiasm of that audience that goes to those outlets. But those probably aren't the audience for these things anyway. The best sort of example that I've found was recalling the hullabaloo from a lot of the same people over Barbie a couple of years back. And the sort of what were in that case much more explicitly stated themes of feminism and diversity and that sort of thing. And people like Ben Shapiro are saying nobody's going to go see this movie, and then it literally breaks box office records. And then someone posted today, someone found a clip of him the weekend after Barbie came out, saying, well, you're going to see a second weekend drop off on this like no one's ever seen. And there was no second weekend drop off. It's just, it's somewhat performative. I'm sure that in their heart of hearts, these people are genuinely angry that every single work of popular art doesn't speak specifically to them. But a lot of it is generating traffic, generating rage clicks, generating advertiser dollars.
Ugh, it's exhausting. Rage clicks.
It's exhausting.
Get a life. These are the same people who are going to go see the movie. That's the best part. Jason, really appreciate. Jason Bailey is a film critic whose work has appeared as well in the New York Times, Vulture, Playlist, Slate, and the Rolling Stone. How did we find you at Bloomberg? This is great, Jason. Come back and see us again. Look for him on the terminal and online as we assemble our political panel. Little did Jeannie Shanzano and Rick Davis know they'd be diving into this right now. Bloomberg Politics contributors. Jeannie, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick is Republican strategist partner at Stone Court Capital. And we'll get to the tariffs and the other policy coming up in our second hour, guys. But how about Superman and crypto here? Jeannie, what do you make of the woke outrage over this movie?
To read you one tweet or X that I saw, Joe, because it encapsulates it. Somebody said that Superman wasn't an illegal immigrant. He was an unaccompanied refugee minor because he was immediately adopted, even though he was born in Kryptonian. So people are really going to town on this, the level of detail. You know, we're seeing a lot of MAGA backlash, and it's not just against this movie. From a policy perspective, we're seeing it against the poor agriculture secretary, Brooke Rollins, and the president for considering even amnesty for migrant workers. And so it's, you know, they take the promises the president made very seriously, and they are pushing back at any attempt either by him or apparently filmmakers to tell a different story or pursue a different policy. And I would say, though, that the Superman filmmakers are very much in keeping with public opinion polls, which show that people in the United States, at least, are largely supportive of immigration. And this pushback that we're seeing is very much in the minority.
Rick Davis, I'm guessing you were a Christopher Reeves Superman guy. Is this ridiculous, or does this actually tell us something that we can't put a Superman movie on the screen in this country without having a debate over immigration?
Yeah, first of all, I'm a big fan of superheroes. I think they teach moral lessons. I love the fact that Hollywood invests in these things, you know, and let the chips fall on all these social media accounts for people who don't have enough time to do anything but comment, or what is the term? Rage clicks. Love it. I'm going to use that all day today. Look, I get over it. I do think what's really interesting to me is how Trump does such an enormously good job of appropriating these things. I mean, how many Bitcoins are going to get, or meme coins are going to get now minted with his image as Superman on them that, you know, get put out there in the public market? I mean, like, it's amazing how flexible this administration has been, either as a campaign or in government, to jump on these things in a moment's notice and put the president's image to work on them to appropriate whatever positive and frankly, push back on whatever negative that they can get. I mean, it is an administration light on their feet.
Jeannie, did you see Donald Trump in the Superman outfit taking off? Is that working for you? What's the message from the White House? I just want to be serious for 1 minute. That's the official White House account. Put that photograph up. What are we supposed to take from that?
It is the same White House that also put up a picture of him as the Pope. So I don't think anything surprises us anymore. They are staying relevant. They are staying on message. They want to consistently talk about Donald Trump as Superman or as the ruler of the world. And they want to use these moments to change the narrative. And so they are trying to do that. It's, you know, not my cup of tea. I wish we didn't have that, but we are in what, I don't know what you call it, political tainment or something era. And so this is what leaders and presidents around the world are doing. And Donald Trump is the leader of this movement, which I wish we could pull back from a little bit, but I'm in the minority, I guess.
Rick, you see all the crazy AI stuff. Donald Trump looks like a bodybuilder. He's shooting guns. He's doing all kinds of crazy things. And sometimes he is dressed like a superhero. What does it tell you, though, when it's coming from the official White House account? This isn't fan art we're talking about here. It came from the actual administration.
Yeah, no, I think it's the blurring of, you know, sort of government and the web. I mean, he has so many creators out there creating these kinds of content, whether they're in government or outside of government, whether they're Trump supporters or just people out there having a good time. And yet he doesn't blink when it comes to taking an image that he thinks is flattering to him and adopting it as his own. And he's done it throughout his career, right? I mean, he's the one guy we know who actually dummied up a Time magazine cover and put it up in his office. I mean, like, he believes that an image is worth 1,000, maybe 10,000 words, and he has always done an exceptional job of appropriation in that regard.
Well, I never thought we'd be having this abstract conversation with Rick Davis and Jeannie Shanzano, but that is how good they are. They're going to be back in our second hour here, of course, our signature panel on balance of power, as we consider the words of Jor-El to his young son, Superman. Live as one of them, he said, Kal-El, to discover where your strength and your power are needed, but always hold in your heart the pride of your special heritage. You can just imagine the antennas going up. They can be a great people, he said, Kal-El, if they wish to be. Hour 2 of Balance of Power has a lot more on the way as we welcome our global television audience to the conversation. And as I mentioned, Rick and Jeannie will be back with us as well. Kaylee Lyons is coming in. It's the Friday edition. Dial up YouTube right now and we'll meet you back here live from Washington, only on Bloomberg.